All right, team. So today we have PPI data coming out. The other side to inflation data that we got yesterday was CPI. Very relevant stuff, very important for inflation numbers here. And yesterday we came in about breaking. So slightly worse for core CPI, but everything else was flat. Today is the other side of that inflation gauge. PPI, which is the producer price index, where CPI is buyer inflation. PPI is seller inflation. We also have retail sales dropping today, and we're going to talk about those numbers here as well. What's up, P09, FI, bar, DS? What's up, man? Credit Suisse is going down. Oof. Yeah, I'm looking for the Credit Suisse news. All right, so Credit Suisse down pretty big percentages. Hit 207s earlier today. It's dragging the rest of bank stocks down. I think we got to let me see some gold. I'm looking at some gold ETFs now. I think making a small position there is probably smart. You got to see what all the other banks are doing. They're down some, but still haven't hit their highs. List some gold ETFs that you think are worthwhile in chat. Oh man, I'm tired. I'm looking for gold ETFs. AIUM. Or IAUM. Bar is another one. Let's see. What else is there? SGOL. GLDI. Yeah. So it's not going to matter as much as the CPI report, but it's still going to matter. We'll get the timer up. We'll also put a banner up here so you can see. The expectations up. We also have retail sales. So today's actually a really big day, despite the bank problems going on right now. Today's already a pretty big day today. Specifically, we have PPI coming out. Expectations are for 0.3%. Retail sales are coming out today as well. Retail sales expected to show up at 0.3%. PPI expected to show up 0.3%. So retail sales are actually expected to show up at minus 0.3%. There's the data right there. We're looking up well, the expectations for PPI are much less than last time. Much less than last time. Last time we showed 0.7% month over month PPI. This time we're expecting 0.3%. So it's about 0.5% less. Or, yeah. Or 0.4% less, I mean. So, yeah, it's less than expected. Good would be anything under 0.3% or, you know. I'm still looking for the Credit Suisse news. Give me a second, I'll find it. All right, so quote, material weaknesses found in financial reporting. They published their annual report, which was scheduled for publication last Thursday, but ultimately was delayed by a call from the U.S. SEC. Following the completion of the discussions with the U.S. regulator, Credit Suisse confirmed its 22 results announced on February 9th, which showed a full-year net loss of 7.3 billion francs, which is about $8 billion. Shares were down 5% today. They had ended flat today, but yeah, they're down this morning. Credit Suisse's annual report showed material weaknesses according to the SEC. They are down. How much are they down this morning, Credit Suisse? Down pretty big. They're at 208s right now. They're at 250s. All right, so they're down about 16%. All right, so here is basically the news for Credit Suisse. We're going to put this up on the screen as well so you can see it. What's Bitcoin at? Bitcoin's not crashing, bro. Bitcoin's at 24 and a half. Like, Bitcoin's up big over the last couple days. They're not just going to go straight up. Look at Bitcoin on a 10-day chart. You know? This isn't a crash. You know? It's at 24, almost 25,000. You know? I mean, it's not good. It's not like I want to see it happen, but I don't think Bitcoin's crashing yet. But yeah, Credit Suisse down big. Ooh, it's cold on my end today, man. All right, so yeah, prices on Credit Suisse bail-in bonds went down this morning after it put out that internal controls weaknesses. It's a specific, like, unique type of perpetual bond, which are popular overseas. They get wiped out basically if bank runs into big trouble. They sit above the bank's stock and below other bonds and deposits. They had 2027 perpetual securities issued last year. They dropped to 72 cents on the dollar on Tuesday, which is this morning. And this is from a Webull post, I think. According to TradeWeb, it's lower than in early December lows in the days after Credit Suisse warned of customer large outflows. Its 22 report Tuesday said the outflows had, as of March 14th, stabilized as much lower levels hadn't been reversed. They did play it down a little bit, according to their official Twitter. And so I think the real question here with Credit Suisse is, do they survive? Is the real question here. Does Credit Suisse survive? I don't know. Like I said, I think we're in a very unique situation. PPI drops at 8:30, so we will get a timer up here. This is actually pretty right. We're going to put 4 up. Yeah, that's actually pretty right. So yeah, here's the timer. We got about 2 hours. Yeah, for sure. Proud between recession and inflation. So yeah. All right, guys. So FRC bounced it up a little bit. Well, watch Credit Suisse here. The lows of Credit Suisse are 201 right now. The dollar index has been pushing up. We can look at the SPY here as well. SPY is corrected down pretty fast here, down to 387s again. So basically back to yesterday's lows. We'll see if we bounce back up a little bit. We've kind of been choppy the last couple of days. I think PPI will be the most important thing. Sorry, bumped my mic. All right, guys. So yeah, are you buying the dip? We're gonna do a poll like we always do here. Bear with me. We're gonna get our poll live right now. We are live right now. Credit Suisse down pretty big on the day, dragging the rest of the market down here. All right, so Credit Suisse just tapped lows, hit the 190s. All right, so we're gonna ask a poll. What number does PPI show up as? The first option is going to be over 0.4%, which is worse than expected. Next one is going to be at 0.4%, as expected. And the other one is going to be below 0.4%. Better than expected. Vote on the poll right now. We got the poll live on YouTube. Credit Suisse just cracked lows. The SPY just hit 386s, and it looks like it was a good thing that I cut all my long positions here, man. I don't think I'm holding anything. Let me make sure. I don't think I am. Yeah, I am flat in basically everything. The only thing I'm holding is AMC, HKD, and MSGM, which are 3 trades that I've been in for a long time. So cut everything. Not really confident in sitting on anything today ahead of this PPI report. We're also going to do a Twitter poll as well. But yeah, it's actually a big report. All right, guys. So do me a favor, hit that like button as well. We already got 240 people here, and it is 6:30 in the morning. We're doing another poll right now. All right, so we got our poll live here as well again. Let me know what you guys think. So we got higher as an option, at, neutral, below, better. We also have retail sales coming out today, which will influence things. Retail sales are expected showing up at zero or at minus 0.3% for retail sales. 0.4% is what's expected for PPI here. The question I guess I have right now, is it justifiable to buy a dip short term? Yeah, what's up, Raphael? Yeah, for sure. Hey, what's up, Chris? Yeah. All right, Credit Suisse just popped up a little bit. Look at that bounce. Is there a justifiable dip buy? I don't know if I'm crazy. I'm thinking about buying the dip. It's going to be a very short-term trade. I'll tell you that. All right, guys. Dollar index at 104.20s here. Market bouncing back a little bit right now. I don't know if I'm crazy and I want to buy the dip or what this is, but what's up, Ricky? Oh, we can throw Bitcoin up. We're just looking at Credit Suisse right now. I think it was important to look at what's causing the market tank this morning. Dollar index shot up. Look at the dollar index break highs up here. Dollar index moving up, SPY moving up a little bit short term, but been dropping all morning. Credit Suisse dragging the market down. They're having, quote, material problems. I slept okay. I'm not going to say I slept well, but I slept all right. Disney at 92s. To be honest, I might scoop up some more Disney here, in all honesty. I'm thinking about it because Disney at 91s right now. So that's very cheap. I'm thinking about it. All right, guys. So is there a justifiable dip buy here? Again, I know it's risky. And I think anything I buy right now, I got to be okay with losing whatever I buy. What's a good thing to buy right now? I think hedging into gold makes sense too. What's your favorite gold ETF? I know, what's his name? Listed one earlier. Beach Bomb listed some earlier. Yeah, maybe a long-term position on Disney. I'm thinking about it for sure. Disney at 91s. I mean, even if we drop, I could justifiably scale into like 85s, 80s on Disney from 90 basically, and not really lose sleep about it, and just kind of continue to add to it if it continues to drop big, so I can get like an $80, $85 share average if it continues to drop down to like 75 or 80. And I've done that a lot, and it works really well. The question, though, is like with PPI dropping today, jobless claims, and a bunch of stuff dropping tomorrow, the question is that going to be safe? Is that going to be safe? Darren Waller just got married to Kelsey Plum of the Las Vegas Aces. And Josh McDaniels' wedding present was to trade him to the New York Giants. McDaniels is not a romantic, according to RG3. Hilarious. I mean, I kind of feel for him, but it's still funny. I gotta laugh at that. Goldman Sachs was the buyer of the $21 billion portfolio Silicon Valley Bank sold at a loss, which started SVB's collapse. It was Goldman. I bought banks yesterday. Ugh. Silver, AGQ. Yeah, so will the Fed raise rates March 22nd? I don't know. I think there's all good network. Hey, thank you, brother. Network says, big thanks for your stream yesterday. Very informative and spot on with the timely and accurate reporting. Liked and subbed and will be here for all streams henceforth. Hey, thank you. I appreciate it, network. Thank you, sir. Yeah, time's going fast, bro. This is how I knew time was moving fast for me. And honestly, my channel's been growing like beautifully, man. It's been a great year so far. It really has. Like, we're breaking records with regards to our numbers. We're breaking records with regards to our income, to be honest here. And so we're just doing really well. It's been fun. It really has. It's been really fun. And so in that regard, like, I realized how fast time was going, because I realized that earnings season starts again in a month from now, basically. In 1 month, earnings season starts again, which seems so fast, man. It seems so fast. Like, it seems like, and because I have to remember, in January is when earnings season, the last earnings season quarter started. So in January, we had Netflix, Tesla earnings, and a bunch more that sparked off earnings season, which is one of my favorite parts of the stream. So what that means is that earnings season is about to start again in April. So in April, earnings season starts again in about a month from now. So time's moving quickly, man. It's already mid-March, which is crazy. Feels like it was just January. So yeah, time's moving quickly. 386 is on the SPY here. Pretty low. I can't really trade on TOS for another 18 minutes or so, but I can pull out futures. But bro, I have just been, listen, I got to toot my own horn a little bit. I know I'm slow with these funded programs, but bro, I am just been accurate here. Like, I've just been accurate. Like, here's my trading so far on these funded programs. And I know I'm slow, but like, this is how I trade Thinkorswim. I got a profit factor, a win-loss ratio of about 2.56 to 1. You know? So like, you can see my accuracy is pretty solid. My max drawdown in this entire last month was only $405, and my profit here was about $1,600 or so. So I need to move a little bit quicker, but I think it's okay. My plan was to build up a cushion of 1 to 2,000 and then take a swing. You know, and I'm going to continue to use that plan because I think it works. You know, I'm going to build up a cushion of 1 to 2,000, which I'm just about there already, and then I'm going to take a swing. If you look at my Top Step dashboard here, check it out. So it shows you my daily accuracy rate, like basically how many days I win versus lose. And honestly, we've been doing pretty well. You know, we've been doing pretty well. Here is my winning day percentage. So we are green on our Top Step Combine account. 76 days out of, 76 out of 100, we are green here. So look, you can see that right there. Winning day percentage is 76. And so, I mean, I can't, I'm not claiming to be an expert, of course. I never do. But, it works. So we're going to keep that up. And again, if you want to participate in that funded account program with me, you can check out Top Step. Here's the link. I don't usually post it early, but we already got about 340 people here already. So I think it's justifiable. Yeah, for sure, G, 100%. Like I said, I think that's the way you got it. I think if you're in these funded account programs, the risk system I use, people can learn from. Like, sure, you could probably get funded faster if you're willing to reset a bunch of times and stuff. But I think the risk system I use, and you can see my drawdown, how safe it's been, to be honest, right? So the risk system I use is I build up a cushion and then I take larger size. I build up a cushion, I take larger size. I build up a cushion, I take larger size. Usually on a daily basis, I build up a cushion of like $100, right? $100 in cushion. I scale up. I swing a little bit harder after that. And that way, if I lose, then I'm not down much at all. And a lot of the time, I'll just hang it up for the day. But I don't know when's the last time I had a losing day here. Here's the last 7 days. And so I've had a profit factor on the last week of about 4.5 to 1. And so we've been doing pretty well. I don't think I had a losing day, though. Yesterday, we made some. We can look. So, yeah, yesterday. Today's Wednesday. Monday, we made about 2 something. If we keep going back here. Friday, we made something. We made some money. Thursday, we made a little bit. Wednesday of last week. So, yeah, we haven't had a losing day in a week or so, at least. Yeah, Wednesday, we made money. Tuesday, we made money. Monday, we made money. So we're going back 2 weeks now. So Friday, we made money. So yeah, we're going back a full 2 weeks since we've had a losing day. Thursday, we made money. Wednesday, we made money. We haven't, oh man, I didn't realize this, but we haven't had a losing day all month. No losing days in March so far. None, so I kind of shows like my strategy works. People can hate on it, but like, yeah, I'm gonna keep on keeping on, It only works if you work it, Where's the other Joe Dirt quotes? Yeah, guys. I don't know, man. I don't know, Raul. I think there's arguments for both buying the dip, and I might certainly consider buying the dip today, to be completely honest. But it just depends on what happens. What I will probably do is if PPI comes in hot, I might start buying stuff up if we get some profound drops from it. Maybe. I'm not saying I won't. Can y'all hear the music? Can you hear the music? Oh, it's too low? Oh, you'll be all right, bro. All right, cool. But yeah, so SPY breaking lows. And again, I think there might be a justifiable dip buy, but I think I have to wait. I might buy up Disney for long term, to be honest. Disney at 91.75. So that's a pretty cheap level. I'm going to start it off with 25 shares today. All Yeah, so Goldman Sachs is what sparked this. All right, so Jim Cramer said yesterday, quote, Cramer yesterday said, quote, the Fed is on the cusp of a soft, safe landing in its inflation fight. He said it yesterday. And then after he said it, here's the SPY prior to him saying that. The SPY, guys, was right here when he said it. Wow. What a ridiculous thing, man. Hilarious. Not even funny, to be honest. I gotta take a picture of this so I can post it on Twitter, because that's hilarious. Yeah, if you want to follow me on Twitter to watch this. Yeah, I might need a better picture than this, actually. Hold on, let me catch a better picture here. I'm gonna move this. Whoa. Okay, there we go. Yeah. Hilarious. All right, guys. So yeah, for sure. Yeah, markets are still breaking lows here. We got to look at Credit Suisse, I think, too. This is a big aspect of everything. It's down at $2 a share. It's the catalyst that sparked everything here. I don't know what PPI is really going to be. I have no idea, to be honest. I hope it comes in at low, but, that's just optimism at this point. AMC doing another reverse split. I don't know if it's another one. Have they done one previously? So what's the split going to be? Are they what's the price of their shares going to be? Big breaks in the market on the downside here. Again, we might start buying stuff up. Small positions though. Like when I take positions that I buy like this, they're very small positions where like if I lose, I'm down very small amounts of money. But if I'm right, it's so polarized to where like if we bounce back, we can bounce back big. And so I'm going to buy up a little dip here and see what happens. All right. So far we have locked in about $30 here. We took one profit on this already. So we locked in about $30 here. We took one profit on this already. If you want to see today, you can kind of see we're up about 20 something on this in the remaining position here. And we'll let the rest work. There's about $10. We're up about 35 on the trade as a whole. I'm going to let this work. I'm just going to hold this, I think, because I can. Yeah, up about $40 on this now. Up about 50. All right, I just covered. We bounced back so fast just now that I had to cover this, All right, so we are up about 60 on the day already on one trade. $60 on the day, one trade. Not bad. Not a bad little cushion here. We'll see what we do on the rest. Hey, thank you, Freelo. I appreciate you, brother. Thank you, man. Yeah, either way you want to do it is fine. It's all based off of personal preference. Mark says, I noticed some traders saying trade bigger size with smaller swings rather than smaller positions and higher swings. It depends. Bigger size with smaller swings is scalping. But it depends on extension, right? Like you can take both sides. I don't think you should restrict yourself necessarily to just one of those. I really don't. I don't think you should restrict yourself necessarily to just one of those. I think that makes it really restricted in terms of your trading. I think like my profitable trading involves freedom, to do whatever I want to do, right? So if I want to buy this dip and hold it long term on a small size trade and have a big reward and a small risk, fine. If I want to take a large size right now and capitalize on a pretty sure thing, but a very tight trade, I can as well. Either one of those is fine. It really just depends on your preference there. But I think the ability to flow between those two options is okay. Mostly what I've been doing though is the same. I've been taking some size, looking for small green trades. But that's usually after I build up a cushion. When I build up a cushion, I'm actually looking for the opposite. And so it depends on what you want to do. It's all different. Yeah, Credit Suisse is tanking everything down to 194s. Tesla, yeah, where's Tesla at here? There's Credit Suisse on the right. We're going to put Tesla up for a split second here. Tesla down to 177. It's not really a collapse. It's just kind of down. It covered the losses. It's still green from yesterday. Like from yesterday's open, it's still actually pretty green. Do you think PPI will be hotter or colder? I'll be honest. I figured CPI would be hotter and loaded up on puts, but that just didn't happen. I'm not a bear, but just was curious. Yeah, all good. I'm not sure, Oh, wait, they're going to do a reverse split. Yeah. Okay, so yeah, it's going to be a 10-to-1 split, which is good. I think AMC needs that, to be honest. I think AMC needs that, to be honest. Hey, what happened to my Cramer post? I just made a Cramer tweet. What happened to it? What? All right, now I gotta look at tweets. There it is. All right, there's the tweet. I was gonna say, man. Yeah, give me a follow on Twitter if you haven't already, guys. At Beginner Trades is my handle. At Beginner Trades. We post a lot of fun stuff, man. We cover a lot of stuff going on. I don't know why this only showed up. We're at 385s now. Market pulling back a little bit. Credit Suisse bouncing up some. Largest shareholders of Credit Suisse, a bank with 578 billion in assets, says it can't provide more financial support. Yeah, that's overseas. As long as the Twitter's showing it. There you go. But yeah, market's starting to bounce back a little bit. Look at Tesla back up to almost 180s here. Credit Suisse still down there, though. All right, so there's 7 a.m., so I can finally trade. Hey, if you can't hear me, that's on you, bro. Now the time comes, though. I want to buy up stuff. I'm going to start it off with 10 shares or 25 shares of Disney. We are now in 25 share position. Our average is 91.95 Disney. So AMC doing a reverse split. Yeah, for sure. I'm pretty neutral, man. Everybody acts like I'm a perma bull because I want the market to go up. But it doesn't always mean I think the market's going to go up. I think that's what people need to understand. I think we should all want the market to go up. You know, long term, that is. Short term, y'all can want whatever you want. But I want the market to go up. But again, sometimes I don't think it will. And so, you know, there's a difference between being bullish in my stance and being optimistic, you know. All right, guys. So Yeah, let's see if the market bounces back. We bought a little bit of Disney, and we're actually up decently on that trade already. I'm not sure if it'll continue up, but we bought some of Disney, just 25 shares. And again, the whole point is just like, look, we're very green in all this. Whole point is just to let it keep working. Yeah, 8:30 is when the numbers come out. We will stream it live like we always do. Dude, I really like your channel and you are a total bull. I'm sorry. I mean, I understand. Y'all, I understand why you believe that, okay? And it's all love here. Point is, I don't hate shorts is my point. Like, I might be bullish, but I don't hate shorts. And again, I think you have to understand there's a difference between me being optimistically bullish, okay, and me thinking the market's only going to go up. All right? Like again, if I'm only a bull, the example I always use is like, why did I get flat ahead of the not this week but last week? Last week I got flat ahead of everything. You know, if I'm just a perma bull, why would I do that? You know, why wouldn't I sit in my trades? Because I didn't actually think the market was going to go up at the beginning of last week. I thought the market would drop from Jerome Powell's tone and comments, and we streamed all of it live, and we were 100% right about it. We streamed it, we talked about it. And so my point is like, I want the market to go up, of course. Everybody should, to be honest here. If we're in the United States, like, we should want the market to go up here. But it doesn't mean I think it will, okay? There's certain times when I'm willing to buy stuff up when I see it at a discount. But I think what people have to understand about my trading style is I really am kind of like a bottom feeder in terms of like dip buys, right? Like I buy up very weak things and ride those bounces. When something's super extended on the upside, I refuse to buy it. If you guys see me when the SPY's at like 410s, 415s, bro, I'm not buying a thing when that happens, man. I never am. I never touch anything when that happens. I'm always pretty bearish when on a short-term basis when the market does that. And so I understand calling me a bull. But I think people call me a bull for a few different reasons. And the main one being is that I criticize the sensationalism that we get pretty regularly. I think that you can be bearish without always pushing a market crash every day, you know? And I think sometimes the market is going to crash. And I think if we do crash, like I say, I think if CPI comes in, if PPI comes in hot today, if the rate hike decision gets worse, then we could fall pretty heavily, you know? And so I'm not always looking for a move up, and I don't always think we're going to crash. But my point is, sorry, looking at the post here. Yeah, I'm pretty cold, JT. Yeah, that's weird. Yeah, that is weird. Yeah, and the reason I trade this way is just simply because it's worked for me. You know, like looking for it really boils down to the Warren Buffett fearful when others are greedy, greedy when others are fearful mindset. Like when everybody's yelling for a crash, I'm usually buying stuff up. When everybody's yelling for a buy and the market's breaking highs and hitting 410s or 420s, and everybody's like, woohoo, the market's so strong, I'm usually flat. I'm like, all right, I'm getting out of everything because I think a pullback is due. And so I hope that makes sense. And I hope you guys understand it doesn't have to be as binary as you guys think it is, right? It doesn't have to be like if you're a bull, you can never be short, or you can never, bet the market's going to go down, or you can never, be skeptical. Or if you're a bear, you have to always think the market's going to crash. It's just not really, there's more nuance to the market than that, I think. And I think treating it like, the Bloods and Crips is not really a good thing. I think there's more nuance to it is the easiest way to say it. Yeah, I mean the AMC splits are usually a desperate move. Although I do think AMC it's necessary for them to do this, in my opinion. I think they kind of need to do this. If they want a big short squeeze, if the holders want a big squeeze, in order to get that, you kind of need to reduce the float. You know what I mean? Yeah, for sure, Caesar. It's all good, brother. Yeah, like I said, I was flat in everything yesterday. If you guys want to see the trades I got into, you can actually see the Google. You can see where I sold on these. So here's Google right here. right? So we'll put up a 10-day chart. So you can see I kind of started to scale into these. You can see how like smart I was with these dips, right? So I started to buy this Google at 92.89, added some more at 92.30s, sold pretty quickly at 93.45s, so much higher. Still had some more there, so I bought some more down here. Look at that. I added some more to it at 90, fixed my average, and then sold some more at 91.70 and 92.60s here. So you can kind of see how I scale out of everything prior to the big rips, but also prior to the big drops. We also did this with Disney. So again, we also did this with Disney here, where you can kind of see like Disney, same concept, same logic here. We start to add, we start to scale, we take a little bit off at 96s. We start to add back into it down here. Look at 91.60, 92.25s, 90.80s. And then where do we unload? We unload higher at 92.40s, at 93.40s. And then we're flat. Like I said, we cut it. And then we just added another 25 shares back. And so we're just kind of playing that range. But it works really well for me. And again, I'm green on the year doing this. It's just been a profitable strategy for me, to be honest. Yeah, that's kind of how I feel. I try to be more opportunistic than just bear bull. PPI is the producer price index. It's the other side of CPI inflation data, right? So where CPI inflation data is buyer inflation, PPI is seller or like business inflation. So it's the other side to that coin, basically, of inflation. Very relevant for pricing and inflation. We also have retail sales today, which is huge as well. So having both of these follow on one day is a pretty big catalyst here. But markets started to bounce back, to be honest. We're back up to 386s. I'm not saying it's going to hold, but it'll be interesting to see what happens. Credit Suisse all the way down at 190. So Credit Suisse very weak this morning after the SEC contacted them from quote material weaknesses in one of their reports. So not looking good. PPI might have more impact if it's outside of the range of what they're expecting. So it's all relative to expectations. And so like we can have a really polarized reaction if it falls far outside the expectations, right? So expectations are for 0.3%, right? We do, just as an example, we do 0.7, market's going to tank for sure. We do 0.10, market's going to go up, almost certainly. PPI will certainly be more impactful, but retail sales are still very important. All right, looking at our poll numbers, we did do a poll here, and the poll had a decent amount of votes already. So far, 58% think we're going to come in higher for PPI. 23% think we're going to come in neutrally. And I guess I understand that vote a little bit more from yesterday, as we did come in completely neutral for CPI. And then 19% think we're going to come in better than expected, so lower than expected there. Yeah, Credit Suisse is failing right now, or they're not. I don't know if they're failing, but they're not looking pretty. I'll put it that way. Rapper and entrepreneur 50 Cent's former employee stole $6.2 million from his liquor brand, Branson Cognac. After winning the lawsuit, he's now seizing all of his assets, including property, bank accounts, and cars. And he said, quote, "I need you out my house by Monday." I like 50, man. He's cool. I can respect the business moves he's made as well. He made a bunch of money investing in vitamin water. So, you know, people hate, but pretty smart dude, I think. Yeah, PPI is out at 8:30. We got a timer in the middle there. It might be right in the middle. It could be. We also have the number right underneath me here as well. Yeah, for sure. What matters the most is whether this trickles into other banking sectors across the world. That's what means more than anything right now. If this trickles into other economies around the world, then yeah, it'll spread, and that's terrifying because that means the market could tank. But again, at the same time, like I'm not afraid of crashes anymore. You know, like I'm not afraid of crashes anymore. You know, because to be honest, as a bottom feeding dip buyer, if we do crash, bro, I'm gonna be buying up so many dips. It'll be lovely. All right, Tesla's starting to bounce up. We're at 180.50s, guys. 180.50s. Credit Suisse at 202s. Yeah, I would. If we crash, I'll just buy up stuff. You know, market's tanking because Credit Suisse potentially defaulting. Hey, what's a good graph to look for housing prices being up or down on the year? You know, what's a good graph? This is 2020. I want to see later. See, all we have is until October where they've been up sky high. Talk to your realtor. Yeah, I mean, I'm an on and off real estate agent. I've been a real estate agent for years and years. My license is technically expired right now. I'm actually reactivating my license like as we speak, so I should have my license back up within the next couple weeks. I just, to be honest, it's been a while since I haven't been an agent for the last couple years. To be honest, I haven't really needed to. But most of the data is outdated. You can look at like Redfin and see some numbers there, to be honest. I think Redfin is good, you know. But prices are dropping down from the May highs in 2022. You know, the medium sale price for all home types in May was about $333,000. Today it's about about 333. In May it was 380 basically. So we pulled back some. Yeah, third best realtor in the world right now for sure. Definitely top 3. I mean, I'm not actually a realtor here, but hey. Yeah, for sure, man. I mean, listen, I've been an off and on real estate agent a lot of the time for investment purposes, though. Like, I had my license. If I knew somebody that wanted to buy a house, I would be their realtor. If I didn't, it wasn't the end of the world. And a lot of the time, I used it to have access to the MLS in Texas. I'm in Texas, in the Houston area. So. Looking at our poll numbers here on YouTube, About 41% of people think we're going to come in as expected. I disagree. I understand that conclusion because yesterday we came in as expected, and PPI is just the other side of CPI. So I do understand that, right? I really do. But very rarely does CPI come in as expected. Very, very rarely. So I don't think we're going to get that. I think we're going to get something else. But again, I don't know where we're going to go. I hope it's positive, I hope it's a down, I guess. Random question. Does anyone know if you can trade options on your phone? Well, I mean, where you are shouldn't matter as long as you have a brokerage account set up, number one. Number two is, yeah, it depends on where you are, what platform you're using. It's all relative to the platform, man. So it's going to vary depending on whatever platform you're using, brother. All my exes live in Texas. Not mine, bro. Most of mine live in Louisiana, I'm from Louisiana originally, All right, guys. So we got a little pop in markets here. Tesla back up to almost 180s. We got Credit Suisse still down pretty big at 204s here. SPY back up at 385.50s here. I don't know if I got any more dip buys in me, but we made about $60 already day trading so far. I'm not an expert, bro. I have no idea what's going to happen, dude. Lower retail sales because of inflation problems is going to be interpreted as better. What's up, Jose? Hey, buenos dias, mi amigo. Hey, thank you, brother. I appreciate it. I'm from Texas and live in Louisiana. Well, we're backwards, bro. I love Louisiana. I miss the food, to be honest. Credit Suisse all the way back up to 206. But I mean, any Louisiana native's gonna miss the food, Texas has got some good food too. I mean, and honestly, I love Cajun food. I'm a big crawfish person. Anybody that lives in Louisiana or grew up in Louisiana, I should rephrase. But I like barbecue better, But Louisiana's got some good barbecue too. If SPY goes as low as 380, it wouldn't be just a test. Maybe, yeah. Again, it starts to get to a part of where it could spiral out of control, Hey, what's up, Lane? Yes, sir. Yeah, we usually do at least one crawfish boil every year with my family, All right, guys. Again, let me know if you guys think what gold ETF is the right buy here. Also, what's the best site to track recent home prices? Looking at Texas housing activity. All right, so home sales. What about 2023? I want to see 2023. No data on that yet, I guess. We're gonna have to keep looking. Hey, what's up, Wilson? Hey, see you, brother. Later, man. Yeah, like I said, guys, in 1 hour, we got PPI coming out. When is 8:30 in 1 hour, Danny? There might be a timer at the very middle of the screen. There could be. It's possible there is. Hey, what's up, Bernardo? Good morning, man. HGX. All right, guys, we got about 600 people here. Yeah, I mean, Florida, maybe, brother, maybe, man. You know, what do you know about Bro Bridge? I've been to Bro Bridge. Yeah, I'm from Baton Rouge, man. So I'm a couple hours away, but I've been to Bro Bridge a bunch. But yeah, I don't know. I hear people say the same thing every day, though, trader. So it's like today could be a big crash. To be honest, I'm kind of getting desensitized to it because it's like every big economic release, they say the same thing, right? Like CPI rate hike, last rate hike decision, last CPI prior to this week. I mean, like last month's CPI, last month's rate hike on the 1st of February. Like again, maybe we get big crashes, but according to the CPI data, like CPI data came in neutral. And so it's justifiable to like conclude that today's might be somewhat neutral. Now, it might be outside of expected, but I don't think it's going to be like a really polarized number. Like I doubt that. It's possible it is though. But I just don't think like if CPI came in neutral that PPI is going to be much different. Now, it could swing differently, but I don't think it's going to be much different. All right, guys. AMC with the reverse split. Shark Tank's Kevin O'Leary said he will never buy a bank stock again. If you thought putting your money into bank stocks was a good idea, you should change your mind this morning. Yeah, it's one of the reasons. Like, have you guys ever heard me buy a bank stock ever? Seriously, have you guys ever heard me pay for a bank stock ever? Have you ever heard me say I wanted to buy a bank stock? Have you guys ever heard me say I did buy a bank stock? Again, I don't touch those things, bro. They're too risky, man. They're too risky. Like, banks individually, there's just risk investing in them, unless it's the big boys and there's like really big profound drops. I just don't touch them, man. I'd rather invest in other stuff because frankly, that's what works the best for me. I'm not a big banking person in terms of like investing in banks. I just think it's really speculative and risky. Yeah, we don't know. I mean, some say that, but some others say the Bitcoin is going to go up and buy. And so Bitcoin is at a point where we're still pretty green on everything right now. I mean, here's Bitcoin in the middle here. So, I mean, if you look at a 10-day chart on Bitcoin's still very green over the last 10 days. It's essentially gone from about 21,500 all the way up to 24,500 here. So Bitcoin, very green so far on the last 10 days. Right around 25K now. So again, we'll see what happens. But yeah, I mean, it's up big right now. It might have pulled back a little bit, but it's not going to go up forever. That's just not how Bitcoin works. Tesla's still moving up. Just tapped 180 here. SPY back up to 386s. Now Schwab might be an interesting buy. There are some like Schwab is interesting, I think. But Schwab's not really down that much, to be honest, because I think Schwab dropped enough in sympathy from banks, but I think people recognize it as a little bit stronger institution and a little bit outside of like conventional banking as well. It's more investment banking and a little bit different than that. So because it has diversifying into like the trading platform sector and stuff like that. So I think Schwab is a little bit safer, and I think people are looking at it as such. It's pretty neutral on the last couple of days, so it's been basically curbed this volatility so far. Yeah, JP Morgan, Bank of America, Wells Fargo. Yeah, for sure. That's the hypocrisy. Jay Thomas. He said O'Leary was perfectly fine telling people to invest in FTX. And of course, we all know how that turned out. But yeah. But again, I think I understand banking as a whole being risky, you know. All right, guys, market pulling back a little bit. Tesla at 179.20s. All right, so Silicon Valley Bank CEO was selling shares leading into this. Charles Schwab CEO bought 3 million in shares yesterday morning. So I mean, that's probably another reason why it's propped up a little bit. And again, I think that'll probably turn out to be a pretty solid investment. We still got about an hour, guys, about an hour. I haven't been keeping track of the World Baseball Classic as much as I want to. But I know one thing. I hope the Dominicans are beating everybody. Let me look. But the team that they have, they should be winning. All right, so far. What's their stats? All right, so Venezuela is still ahead of the Dominican Republic team, but the Dominican Republic team are 2-1. So Venezuela's doing great, man. What's the Venezuelan team like? Let's see. Venezuelan team's doing pretty solid. All right, they've got Jose Alvarado, Max Castillo, De Jesus. They got Edwin Escobar, Luis Garcia. The rest of them are all right, but it looks like they got some. They got Ranger Suarez, Jose Ruiz, Eduardo Rodriguez, Salvador Perez, Robinson Chirinos, Jose Altuve, Eduardo Escobar, Andres Jimenez. Yeah, they're pretty solid. Gleyber Torres, Acuna, Peralta, Miguel Cabrera. Okay, that's why they're winning. I mean, they're up there too. Rubelis Odor. Yeah, so they've got a team, man. I didn't realize the Venezuelan team was so stacked. But that kind of makes sense. But I still don't think it's as good as the Dominican Republic team, bro. They've got Brian Abreu, Sandy Alcantara, Diego Castillo, Johnny Cueto, Luis Garcia, Christian Javier, Luis Ortiz, Gary Sanchez, Willie Adames, Robinson Cano, Rafael Devers, Wander Franco, Manny Machado, Ketel Marte, Jeremy Pena, Teoscar Hernandez, Eloy Jimenez, Julio Rodriguez, Juan Soto, Nelson Cruz. Yeah, I mean, I still think the Dominicans are more stacked, but both teams are solid. But I still think the Dominicans, like my favorite team is the Dominicans here for sure. That's a stacked team, you know. What's up, Shepard? Yeah, I don't know if we're gonna get dumped on today. We could, like I said, it's good. It depends on what PPI shows up as. We got about an hour until that data comes out, but it depends on what happens there. Jimenez, yeah, sorry. I'm sure I'm gonna mispronounce some of their names, but I appreciate the letting me know. Now I know, so I appreciate it, Diego. I forgot J's are silent, but still, you know, still one of my favorite teams. The Dominicans. Wait, don't the Dominicans have Vlad too? Don't they have Vlad Guerrero? I don't see him anywhere. Is he playing? What position is Vlad? Vlad's usually first baseman, right? But they're so stacked anyway, bro. Their infielders are Willie Adames, Robinson Cano, Devers, Franco, Machado, Marte, Pena, Segura. So that's pretty stacked infield. Where's Vlad at? What team is Vlad on? I thought he was Dominican Republic. I don't know. All right, I'll stop talking baseball. Y'all got me started on baseball. I'll stop talking about it. Well, I know the new rules about the shift being banned in certain ways and how they're kind of finding loopholes in the shift ban. I understand the bases are larger. I understand that they also have the new timer for pitchers, which I agree with 100%. I understand it's going to mess up the flow of some batters and pitchers, but I think the timer is necessary. I think it's going to make them speed the game up, which is necessary, you know. So no, data comes out in about an hour, guys, about an hour. My bias for PPI, I'm not sure. I think it's going to come in somewhat neutral. I don't think it's going to be far outside of expected numbers. But aside from that, I really don't know. You know. All right, Schwab at 56.30. Schwab is the only bank stock that I'm considering buying here. But the problem with it is that it's not really extended enough. Bro, we don't care about baseball. Bro, listen. The U.S. doesn't even have the best baseball team here, okay? Like, we don't even have the good baseball team. Like, that belongs to South America, okay? The Dominican Republic, the Mexico team is solid. Venezuela's solid. Like, the U.S. acting like baseball is a pure American sport shows you don't understand it. Because America's not even the greatest team. The best players are not even American players, to be honest. Like, my favorite players are not American. My favorite players, except for maybe Jacob deGrom and Trout, but Trout's not really. My favorite players are like Acuna. I like Ronald Acuna, Juan Soto, Julio Rodriguez. So, I mean, my favorite players aren't even American, man. So don't hate. That's all I'm saying. Tesla bounced it up. It's almost up to 180s here. We'll see if it continues back up. But Tesla's rebounding. Market's bouncing back up a little bit as well. Credit Suisse still sitting at $2. Soccer's too boring. I'm going to call it soccer just because. Soccer's too boring. It's slow. Nothing ever happens. They score like 2 times in a couple hours. Boring. They go back and forth, back and forth, back and forth. It's just boring. I'm sorry. It's just not my sport. I understand it's the universal sport of the world. I really do. But for me, it's boring. Favorite player from the past? Are we talking about my favorite player, or are we talking about who I think is the greatest player? And that's a different list. For sure, that's a different list. I gotta go with like Willie Mays, Bonds. If we're talking about the greatest, I think maybe Mickey Mantle. Do you think that consensus expected results on PPI gives the Fed the most flexibility to, quote, interpret the results as they see fit? If they come in hot, what action does the Fed have to take and vice versa? Well, I think it's a very slippery slope here with regards to rate hikes and inflation right now. I think the worst reaction and the worst results we get for PPI today, retail sales today, jobless claims tomorrow, I think the worst results we get, so the higher inflation numbers we get, so the higher PPI is, the higher retail sales are, I think the more likely the Fed is to reverse its stance on rate hikes and pivot to 0 rate hikes potentially, or stay steady at 25 basis points. I think regardless of what happens, the Fed is not going to do 50 on the 22nd. I think they're at least going to do 25. If the inflation looks really bad leading up to that, like today and tomorrow, and we got some other economic releases leading up to it, I think the Fed will probably go to 0. But right now, I think what's expected is 25 basis points, especially after the somewhat neutral response we had to CPI. But at the same time, the banking collapse is making it far more likely that they're going to pivot. Like, again, it can spiral out of control, and that's not necessarily a good thing in that regard, where it's like, okay, the bank collapse is going to make the Fed more likely to reverse its stance and pivot to 0, right? But pivoting to 0 is going to mean inflation fears. So pivoting to 0 is going to be bad for inflation. It's too early, a lot of people think. And again, I'm not sure what the best approach there is. Let me know what you guys think. But I know the worse inflationary data we get, the less likely the Fed is to reverse its stance on rate hikes. The more banking falls, the more likely the Fed is to reverse their stance on rate hikes. So I think I might have said that wrong previously. If I did, what I mean is the worse inflation looks, the worse PPI data is, the worse retail sales are, the less likely the Fed is to reverse its stance on rate hikes. The worse the market looks in terms of banking and drops related to that, the more likely the Fed is to reverse its stance and pivot with regards to rate hikes. That is what I meant to say originally, if I didn't say that first. So yeah, I think it all depends on what the data looks like today, and it'll be interesting to see. So if we're higher than expected, market's going to drop almost certainly. Higher than expected signals worse inflation, right? So PPI is the producer price index. It's pricing on the seller side, and so higher than expected is bad for sure and will tank the market. Lower than expected is good for sure and will make the market move up. Anywhere close to the number expected, though, will cause a little bit less known reaction, right? So what's expected right now is 0.3%. Right? So say we show up at 0.2% or 0.4%. With both of those being so close to the expected number, the reaction is less known, right? But anything polarized, like if we show up at 0.7, market's almost certainly going to drop. If we show up at 0, market's almost certainly going to bounce because it's polarized outside of the expected number, if that makes sense. So that's the way to look at it. Higher is worse, lower is better. The more outside the expected range, the more polarized the response is going to be. Like the bigger the response is going to be, the bigger reaction, the more brash reaction we're going to get, the more outside the expected number, which is again 0.3%. We also have retail sales expected at minus 0.3%. So retail sales are expected to show up. And again, in that regard, because of inflationary problems, less is more there. So if we show up at minus 0.6%, which is much lower, much less retail sales than expected, that's going to be interpreted most likely as a positive because of inflation problems, and vice versa. If we show up at positive 0.1% or something like that, that's probably going to be seen as very bad, and the market's going to fall because of inflationary problems and fears. That's the nuance of it right now. That's what we're looking at. But again, right now, because of the banking collapse, there's a balancing act that's going on right now. Because, okay, the more the market fears a recession, the more likely the Fed is to pivot to 0 and stop raising rates, which is going to be bad for inflation, right? But the more the market is fearing a recession, the more banking collapse is imminent, so forth and so on, right? The more likely the Fed is to switch its stance and pivot to 0 rate hikes and stop raising rates. Because a lot of the reasons, the banks are blaming the drops on rate hikes, essentially. The more the banking sector and the market as a whole rebounds, the less likely the Fed is to pivot to 0, and the more likely the Fed is to be aggressive in their rate hikes and go 25 or 50. And so it's going to depend on what leads up to the rate hike decision with regards to numbers like today, PPI, retail sales. Tomorrow we've got jobless claims, as well as I think we got the Philly Fed index tomorrow. So we got a bunch of stuff going on. Data's not out yet. Data drops in about 45 minutes. Yeah, all good. All good, man. Question is, which is the best bank to buy? The bank that's dropped the most that you think has got the best long-term chance of succeeding. So in that regard, long-term, I'm looking at like Bank of America is one that I'm potentially looking at. I'm looking at Wells Fargo. I'm looking at FRC, looking at Western Alliance, but I don't know if any of these are good to buy right now. I think there's still obvious risks in that regard here. Yeah, I just bought a little bit of Disney, Tony, but my plan is to buy a very small amount of shares now and then add back. If it continues to dip down to like 85s or 80s, I'll continue to add to it and scale into it like an average, hopefully of like 83, and then just look for a pop. But yeah, I'm not buying anything right now yet in terms of banking. I think there's too much risks, and I think, with the numbers coming out today, it could spiral, All right, guys. SPY at 385.50s here. Tesla at 179.50s here. We got CS at about 2. So Credit Suisse bouncing back of them. a little bit here. Fed realizes that firing people is not working. Is there no one protect corporate profits? You just let it go to see what happens. Inflation is not a problem. Yeah, so Schwab bought a bunch of shares yesterday for sure. So this is going to be February's PPI numbers, Shepard. So this is going to be numbers from February. It's always the previous month in terms of CPI and PPI. So CPI numbers were from February. Today's numbers are from February as well. All right, guys. Market pulling back again. SPY at 385.20s. Tesla at 179.30s. That's just a support level we drew yesterday, I believe. That 385 spot, Sam. Yeah, so just kind of hanging out. Let's see if we get anything favorable today. SPY pulling back. Really been bouncing back and forth between 385s and 386s for the last 10 or 15 minutes. CPI is a larger reaction by far, but PPI is still very important. It's still pretty big stream, to be honest. Yeah, for sure. All right, so yeah, we're flat on our little Disney dip buy, but again, the plan is just to add to that one if we need to. Vote on the Twitter poll as well. We got a Twitter poll. Vote whether on what you think PPI data is going to show up as. There's the Twitter link right there. I don't know what crypto is going to do. I don't know whether it's going to crash or not. Yeah, so PPI today. We'll see what happens. Please stop spamming Jay. Yeah, so Credit Suisse all the way down under $2, basically tanking the market. I don't know if somebody got to it already, but Fed swaps now shows 100 basis point rate cut by December from its expected peak. Hey, thank you, Mike. Yeah, interesting here. I don't know if I'm buying up stuff yet. I might buy a little bit of Disney at this point. But I think patience is what we got to do here. TFC, what is this? This is Trust or Truist. So over 0.3% is worse than expected. Under 0.3% is better than expected. And generally, there's going to be an inverse correlation. Yes, that's a tough call, Link. Also, guys, y'all check out Chart Prime. Chart Prime's one of my sponsors. I didn't give them enough love yesterday. But Chart Prime is really, really cool, man. So again, you guys know I trade futures. And again, here's my graph on futures. And I'm not saying this is purely from Chart Prime, right? I'm not saying this is purely from Chart Prime. What I am saying, though, is that Chart Prime can be powerful. You know, if we zoom in here to yesterday's price action, we just look at how accurate they were yesterday. I want to show you guys this. So this was them yesterday, right? And what Chart Prime is a trading view indicator service. So like, look, so what they do is they give you custom alerts, custom signals. They give you reversal up signals, reversal down signals, all that good stuff here, right? And I find the true edge is when multiple show up together at once. But like, look at this. I can't fake what this is. And again, I'm biased because they're a sponsor of mine. But like, look at this. All right. So like, let's look at the lows of each of these, right? Reversal up, huge rebound, back up. Reversal up here. Huge bounce back up, literally at the very top. Look at this reversal down, literally at the very top. You get drops over the next like 20 minutes. Reversal down at the bottom. That one might have been just a wick buy. But if we keep going back to the rest of the day yesterday, look at this here. So literally at the very top of some of these channels here. And again, the real edge is when multiple show up together at once, right? So like, look at this reversal down signal and bearish engulfing candle. You get a nice drop over like a 15-minute period. They also show you range. And so this light green area here is the top of the range. It's the resistance of the range here. You get a bunch of bearish engulfing candles showing up, and you also get another drop over like 45-minute period of time. Literally calling out the very tops to this. It's called Chart Prime. It's a trading view indicator service. You can use it on any time frame too. You can use it on a 1-hour chart. And so here's every candlestick represents an hour, you know. This could just be powerful. You got to use it right. But look at this. Literally called the very bottom of this here. And this is like literal days following it here. So here's the bottom. Literal days following it. Here's a bearish engulfing candle, an hourly candle. Little days of drops. Possible reversal up. Literally top to bottom here. It bounced up some. So it did bounce up some. And again, very cheap. This is $35 a month if you use my link. It's $35 a month. They are a sponsor of mine. Check them out. It's called Chart Prime, Trading View Indicator Service. I'll post the link right here. Great way to help support the channel. I'm sponsored by them, so I'm certainly biased in their favor. But again, for $35, again, I think the edge that they can give you is profound. And that's just a small piece of what they offer. They also give you chart patterns. They've got oscillators. There's just a lot of different ways to do it. You can auto document support or resistance, all that cool stuff. No, it doesn't repaint. At least the reversal signals don't repaint, Julian. So the reversal signals don't. No, the reversal signals don't repaint. Again, I've asked them that. That's one of the first questions I had with them was, do these just correct themselves to look more profitable than they are? And they don't. They don't repaint. They don't show back up. But reach out to them to be 100% sure. But from my understanding, Chart Prime doesn't repaint. For Tesla put since Friday, you should be doing okay with there. My Disney trade's bouncing back up. So yeah, my Disney trade's popping back up a little bit here. You can also use it in crypto, Forex, whatever you want to do. Yeah, I mean, here's the rest of yesterday's action too, which is actually pretty cool here. Like, look, reversal up, bounce at the very bottom here. Reversal up, bounce, reversal up again, bounce. It also shows you correlation. The other thing you can look at is like there is you can look at their actual chart patterns. And so you can see like if I put like a 5-minute chart up here, like look, you can kind of see the wedge pattern. It'll draw for you automatically. And yeah, the 5-minute chart looks pretty solid too. Look at the accuracy on the 5-minute chart. These each, look at the bottom low here. Right at the bottom. Nice little bounce. All right, so we're a little bit green in our Disney trade. We bought 25 shares of Disney. So what we did, random weird guy, is we sold our Disney trade. I believe it was yesterday. Again, people can get mad. I talk about Disney. Most of the time, they're just mad I'm making money, you know. But we cut out of Disney yesterday, and we just bought it some more again this morning. Just 25 shares. But let me see. I think it was yesterday. It might have been the day before. Okay, so it was the day before. So we actually liquidated our Disney positions at 93.40 the day before on the 13th. So we got flat, and then we recently added back on the dip down to 91.95 is our average there. Now, again, I have no idea if this is going to work. Not an investment professional. Not liable if you lose. You know, always make your own assessment. Trade responsibly. Can't guarantee anything's going to work for you. Tesla's still bouncing back up, though, at 180s. Well, yeah, it can only show you after the candlestick's actually there. I mean, that's not a reasonable expectation for it to show you it before. And if they showed it to you before, then it wouldn't mean anything. Like, they have to wait for the candle to close before they can alert you. But I mean, that doesn't mean too much here, for instance, right? Because, like, okay, here's a good example. Right? So this candlestick closed here. Right? And then afterwards, literally, like I said, over hour period of time, this is 5-minute candles. This one closed here, drops over, like, this is like an hour, you know? Same thing here. Candlestick closed here, right? Moved all the way back up to here afterwards. So, I mean, the candle closing there is that's kind of how any of these are going to work. You're not going to be able to find one that accurately does it before the candle closes because, again, if you do it before the candle closes, you don't actually know if it's a hammer candle. You don't actually know if it's a reversal candle, so forth and so on. So you got to wait for the candle to close before you get the alert. Yeah, we still do top step. Chat GPT forecast a crash on March 15th. Yeah. I think it's predicted. I think it bets that a crash is going to happen every 15th of the month is what it really is. So I think Chart Prime basically, or not Chart Prime, Chat GPT basically predicts a crash. If you ask it, it'll say the next 15th. So if you ask it again, it'll say April 15th. If you ask it again, it'll say May 15th. If you ask it again, it'll say June 15th. And so it's done that every month so far. You know, I think. I'm pretty sure. I'm not 100%. Somebody might correct me if that's wrong, but yeah, I'm still partnered with Top Step. They're still sponsoring me. All right, guys. Tesla tapped 180.50 right at that volume weighted average price. Credit Suisse just broke lows again, team. Down to 190s right now. Look at Credit Suisse's breakdown here. Yeah, so basically it caught a crash on the 15th, and then it caught a crash on the 15th of this month. All right, so we're slightly green on a Disney dip buy, but not much. Credit Suisse just cracked lows again, though, at 189 too. That's bad for banking, of course, and the rest of the market is falling back down with it. Hey, good luck, Beach. Have a good day, brother. What is wrong? So Credit Suisse had dropped their yearly report, and they were contacted by the SEC, as the SEC in their yearly report noticed, quote, material. What did they say? It was, quote, it was material something. Hold on, I'll find it. So yeah, Credit Suisse. All right, so yeah, so the Saudi National Bank declined helping them. Uh, so they're not going to get helped by one of their largest investors. Material weaknesses. So Credit Suisse said it found, quote, material weaknesses in its yearly report and control procedures for the past 2 years after questions from the SEC last week. That is the reason Credit Suisse is tanking down here. And Credit Suisse has already had a kind of a tough run. But yeah, we got about 24 minutes, 25 minutes. I'm buying more Schwab today. Hey, good luck, bro. I hope you make money, man. All right, under 385s here. Tesla at 180 or so, 180. Credit Suisse at back up to 192. So it broke back above the previous low at 190. We'll see if it holds here, guys. Again, we do have retail sales dropping today. We've got PPI dropping today. With both of them, higher is worse, lower is better. So with both of them, in terms of market activity, there's probably going to be an inverse correlation where we do higher than expected retail sales. The market is almost certainly going to drop. We get higher than expected PPI, the market is almost certainly going to drop. And so it is one of those days where we're probably going to get an inverse correlation with Credit Suisse or with PPI and retail sales and the market activity here. So market pulling back a little bit now. Again, I'm pretty flat in everything. I've got 25 shares of Disney, but the plan is to keep adding back down over a $10 range in Disney. So we drop all the way down to 81s. I'll still continue to add to it up to that level here in a very small share size that we're not really super worried about. So the only thing we're holding right now, aside from that, we are pretty much flat on everything else. I just don't trust everything else here. I think there's way too much risk in that regard. I just don't trust it. So I think other banks could. Whether they will, I'm not sure. Well, SVB is essentially done. It's insolvent. SIVB is essentially done. It got halted at 39.40s and never resumed. Basically, the SEC or the FDIC said they were taking over and crediting depositors back and liquidating everything for SIVB. So that's over with. It's done. The next one people are looking at is Credit Suisse, which is down big today. Down big percentages this morning. You know, Credit Suisse is down over 25% right now over the last over the extended hour session. So it's down like 30 something percent right now. So just a big drop. Today's going to be interesting for sure. But yeah, really interesting time. All right, so Bill Ackman, I'm quoting Bill Ackman here. He said, quote, the irony of SVB intervention is that we now have 3 tiers of banks, SVB and Signature Bridge banks, which are now the safest banks with explicit guarantees on all deposits, the SIB banks, which have implicit guarantees on all deposits, and other banks. Yeah, we cover a little bit of everything. Yeah, today will be fun for sure. Also, guys, we're going to throw it in sub-only mode here. So if you have not already, hit the subscribe button, guys. We cover these streams. My big thing here is, like, in my opinion, there's enough stock market gurus out there. Like, I don't claim to know anything. I don't claim to be an expert. I don't act like a guru. I don't charge for content. Like, I don't sell a course. I don't sell my own service. I have sponsors, of course, but I don't sell my own service. I don't claim to be an expert. I don't even claim to be a good trader. I am green on the year in my swing trades, as well as pretty green over the last couple weeks in trading here. You can see my graph fully on this here. You can kind of see it over the last 7 days. You can see it over this month, which is March. You can see it over the last 30, which we're up about 1,600 or so. So we're doing pretty well. But again, I don't claim to be an expert. My big thing is, like, I just want to be a resource and community of traders, right? So where we don't try to sell you a course. We just kind of put everything out there for free. And of course, we got sponsors to subsidize it. But again, we're just a resource and community. So subscribe to that, guys. Let's keep the growth up. Thousands of people tune in for these big days because we cover the data very quickly once it's released. Very quickly once it's out, we will go over what the data actually is. We're set up to watch it. And, you know, again, hit that subscribe button, guys. Let's see what we get today. Should be fun. Yeah, there's Bitcoin. Bitcoin all the way back up to basically 25K today. Basically 25. This will be really fun, guys. Let's see what we get today. It should be, again, the thing to understand about PPI is that the farther outside of the expected, the more brash the reaction is going to be on both sides. We come in much higher than expected, going to have a really brash downward, move. We come in much lower than expected. We're going to have a really brash upward move. Hopefully, it's never a for sure thing, but hopefully, and we'll see what happens. Let me know what you guys think. All right, guys. SPY up to 385.20s here. 385.20s. Tesla at 179.40s here. Bitcoin at 24.95 as we speak here. Credit Suisse still down at 190s. Yeah, I mean, no. Everybody always says we're doomed. Maybe we are, but I don't know if. Again, I really get desensitized to it because I've heard it every day for the last 6 to 8 months. All right, guys. So again, pretty sideways over the last. Let's look at the market as a whole here. So the market has been pretty choppy over the last couple hours. Okay, so here is the SPY over the last like hour and a half or 2 hours here, and you can kind of see we're mostly just in a chop territory right now. You look at Tesla; it's basically been the same thing, slightly positive though. Bitcoin has been moving a little bit here, but again, we're kind of in a choppy period right now. Credit Suisse is one we're watching closely. Bitcoin basically doing the same thing, kind of going up and down, up and down, up and down. I'm not sure if that's what we're going to continue getting here, but That's where we're at now. SPY right around 385s here, just kind of going up and down. A lot of patiently waiting traders for this data here. So a lot of traders are just kind of patiently waiting for this data to come out. And again, hopefully we get something good. I'm not sure what we're going to get today. Hopefully it's somewhat positive. We got about 1,100 people here. We still got about 15 minutes before this report comes out, about 15 minutes. Sub and hit the notification bell if you have not already, team. We certainly appreciate the love and support, guys. Gold has been pumping. Yeah, I'm sure gold is. With all the fear going on right now, gold is one of those safe haven assets that people are going to flood to. So I understand that for sure. Hey, good luck, Cupcake. What's up, Sardar? Yeah, I mean, we might drop. Like I said a couple weeks ago, man. If we get the perfect storm of bear action here, we could crash. I don't think it's a for sure thing though, but you know, that could just be optimism. I hope we don't crash. But even if we do, I'm flat in basically everything. So it's like I wouldn't lose almost anything if we crash. And you better believe if we crash, I'm buying up some dips. You know, most opportune time to buy anything is in the crash, of course. It's when things are the cheapest. All right, guys, market's still sideways. Bitcoin still pulling back at 24.85 right now. SPY bouncing all the way back to the volume-weighted average price. Let's watch the VWAP level leading into the PPI and retail sales report. Here is the volume-weighted average price, purple line right there. So we'll see what it does. Still got time. As expected would probably mean neutral reaction, kind of like we got yesterday at market, right around the market open. We got pretty neutral reaction leading into it because it was basically as expected. They expected, what did they expect yesterday? 6%, and the data showed up at 6%. So yeah, we are waiting here for the data to drop. We'll see if we get something good today. Today we have PPI, big day. Very relevant inflationary day in terms of everything coming out here. So big day. It is the 15th, a Wednesday. PPI retail sales come out today. Again, PPI expected to show up at 0.3%. Retail sales expected to show up at minus 0.3%. Core retail sales expected to show up at minus 0.1%. New York State Empire Manufacturing Index expected to show up at minus 8%. So we got a lot of stuff. So we got the New York State Empire Manufacturing Index. We got core retail sales. We got PPI data and retail sales data all dropping today. So again, retail sales minus 0.3%. Anything over that will be bad. Anything under that, so like farther in the negative, is going to be better in that regard. PPI 0.3% higher is worse, right? So when we show up under 0.3% or negative, it'll be good. Core retail sales expected at minus 0.1%. Same logic. New York Empire State Manufacturing Index from March expected to show up at minus 8. Minus 8. It measures the relative level of general business conditions in New York State. Above 0 indicates improving conditions. Below indicates worsening. So that reaction is a little bit less for sure in terms of stuff, but the time is almost here. Market bouncing back a little bit. Yes, 0.4 or more is worse for sure. It's going to be interpreted as worse. All right, guys, we got about 1,300 people here. 11 minutes or so until the data comes out, about 11 minutes. Yeah, like I said, we dump on buying. All right, guys. Market pulling back pretty choppy ahead of this report here, team. Retail sales, again, minus 0.3% expected. Are y'all singing the thong song in my chat room? Yeah. Listen, I grew up in the 90s, bro. I know the thong song, you know. What was his name? Yeah, make sure, again, before this data release here, we got about 9 minutes left. Before this data release, make sure you hit the play button next to the, make sure it looks like this. All right, you want to make sure it looks like this. All right, you want to make sure, wait, sorry. You want to make sure it looks like this. You see the red live button? You see the red live button right here? You want to make sure it's red, okay? Like, it needs to be red. If it's not red, then you are delayed. You're behind on the stream. And so, again, I'll give you a little bit better look of it here. Make sure your red play button looks like this, guys, because that way you're caught up on the stream. Okay, that way you know you're live. Is if your red play button. If it's gray or white, then you're delayed on stream. You want to hit the live button, press live right there. It should catch you immediately back up. Oh yeah, Cisco. That's it. That's right. Going to long Bitcoin today. What is good, over or under? Under. Under is good in both retail sales and PPI. It means less inflation problems. Higher means higher inflation, higher prices. Higher prices is going to be seen as a negative for sure right now. And so again, over it is worse for sure. It's going to be interpreted as worse. Under is better. And that's essentially what we want, is under for sure. You know, we want lower numbers here, like without question. And again, if you want to trade these big economic releases, we've had a pretty good time doing so on Top Step here. Here's my graph over the last month. The volatility has helped me for sure here. And again, if you want to test yourself, this is a funded account program. And this is just super useful because it's like a lot of traders, they want to learn to day trade, but they don't want to take the risk, and it costs so much money to day trade. And this is just a cheaper barrier of entry. Like, this is the most legit futures funded program in the world. They've been around for over 10 years. And what they do is they give you a demo in futures, and there's no PDT in futures. You can day trade a margin account, short it, all that good stuff. But it costs about 10 to 15K to do so. What they do in these funded account programs, it's much cheaper. You can get in for like 140 bucks is the base package. What they do is they give you a 50K demo account for the base one. If you can hit 3K in profit on that demo without losing 2K or $1,000 a day and following the rest of their rules, then they fund you with a 90%. So if you get funded and you make 20K, you keep 18 of that. They keep 2,000 since they're funding you that money. And again, they pay out millions of dollars in actual withdrawals. It's just the cheapest way to do it. It's one of those situations where if you lose, it's not the end of the world. But if you make it, you can potentially get funded with a 90% split. And if you put up the money yourself and lose with your own money, it's going to cost way more than that. And so it's a cheaper barrier of entry. You're only giving up 10% of your profit to do it if you can get funded. And it's just the easiest way to test yourself without taking on a lot of risk. So you can get 20% off if you use my link as well right now for Top Step. They are a sponsor of mine. I'm certainly biased in their favor, but you can check out the link right here. Hear me out here. No one is talking about this, even if it's higher than expected, as long as it is lower than last month. We might still have a small rally. Yeah, that's kind of what we got yesterday, where yesterday it was lower than the previous month. Last time it was 0.7 though. So 0.7 is the previous month's number. So for January, PPI was 0.7. Right, so if February's comes in under 0.7, it could be interpreted as positive. But again, generally with stuff like this, it's going to be relative to expectations. Brother, it's going to be relative to expectations. So 0.3% is the number. It's the red to green number, right? So under 0.3, good. Over 0.3, bad, most likely. Unless it's close. Like if it comes in at 0.4%, we could still justifiably get a positive reaction. But if it comes in far outside of 0.3, we're probably going to react negatively. If it's far outside of 0.3 on the upside, then we're probably going to react negatively. If it's far under 0.3 on the downside, then we're probably going to react positively. So that's the thing to understand. But again, 0.7 is the previous month's number here. So if we come in under 0.7, we'll still technically be below what we showed up as before. And then we also have retail sales. Again, retail sales expected to show up at minus 0.3%, which is a much better look than last time. Last time it came in at positive 0.3%. And again, retail sales is bad if it's higher because, again, it means worse inflationary problems. More sales means more price raises and more inflation issues. Oh, wait, is it a problem universally with all mods, Pawn? Sorry, brother, let me check. Yeah, weird. Yeah, I tried to ban somebody earlier, it wouldn't work either. So it's kind of weird. Yeah, sorry guys. We'll have to figure it out. There's a new form of community moderation though. Okay, gotcha. Yeah, I'll have to mess with the guys. My bad. You can try it again if you want. But all right, guys, we got 3 minutes. But I don't. You're gonna have to try it on somebody. uh-huh. Geo, I guess I'm gonna have to go ahead and comment on this. Geo, I ignore you because you're toxic, brother. It's not just because you think the market's gonna go down. You were actually banned from our crypto channel because you just kind of disagree with everything somebody says and just kind of press buttons as you are now and then cry when we don't talk to you. It's just kind of toxic, brother. Like I can look at the chat history and see how you've kind of acted over the last couple months, really, as well as on the crypto channel, and kind of see that you're toxic, brother. Again, no offense, but GG to you, sir. I mean, this is a perfect time for me to try blocking you. I don't know if it's gonna let me, but you know, we'll do it next time. But yeah, has nothing to do with your bias. It just has to do with you being toxic generally, you know. My guess is you're somebody else who got banned who is now in a new account, is my guess, right? We come out in about 2 minutes. 2 minutes. Yeah, here we go, guys. We got to focus on the results here. All right, guys. Data comes out in a minute and a half, guys. A little bit over a minute and a half. All right, a little bit over a minute and a half. We got about 2,000 people here, team. So hit that sub button if you haven't yet, guys. Hit the notification bell. We appreciate it. Hey, thank you, brother. I appreciate it, guys. Thank you for the support, team. Yeah, we try to give people the benefit of the doubt, but at a certain point, it's just kind of like, it's just hard to deal with people. You know, again, if I see somebody as contrarian or just kind of trying to argue with me constantly, I just kind of tune them out, and then they get mad about it because that's what they want. But Credit Suisse breaking down ahead of this report, guys. We got about a minute left until this report. All right, guys, 20 seconds. We're gonna go ahead and pause the timer so that it doesn't interrupt things. We got about 25 seconds left. All right, guys, here we go. I got my sources up. We are ready here for PPI retail sales data showing up. We got multiple sources up. Here's the release right now. Let's see what we get. Hopefully it's positive. All right, PPI came in at minus 0.1%, minus 0.1%, well below expected. This is great news. PPI came in at minus 0.1%. Retail sales came in at minus 0.4%. So less than expected for retail sales, much less than expected for PPI. This is great news, to be honest. Great news. Again, minus 0.1% versus 0.3% expected for PPI. Great news. Much lower than expected here. Much lower than expected. Honestly, a great report. This is going to cause big bullish action in the market, most likely. Bitcoin shooting up to over 25K. Tesla over 181s. Great news for PPI. Again, minus 0.4% for retail sales, minus 0.1% for PPI. So great news, to be honest here. Much lower than expected on both. So again, just great news here. For core retail sales, we had minus 0.1%, which was as expected here. So again, great news here. Lower than expected basically on everything so far. And again, minus 0.1%. We'll put it up on screen. But yeah, this is great. This is great news. This is exactly what we want. Again, minus 0.1%. Versus 0.3% expected. Retail sales at minus 0.4%, which is great. This is great news. Market should rip up on this. And yeah, you can see Tesla ripping up. All right, so we'll put this data up on screen. So we'll put this data up on screen. But yeah, it's great news, great numbers here. There's the data right there. Again, much better than expected. Market's bouncing back up. We got a little bit of Disney here. We're going to let that ride. But yeah, this is great news. It's kind of exactly what the market needed right now. Credit Suisse still breaking down. Honestly, not the biggest reaction, though. And again, this data came in overwhelmingly positive. So not the biggest reaction here. I will say, yeah, a lot of people are right. This isn't the biggest reaction, which is kind of surprising. I think what's still weighing it down is Credit Suisse is breaking lows and dragging the rest of the market down because of bank fears. Like fundamental bank fearing is causing the market to drop because Credit Suisse just cracked lows and looking really, really weak in that regard. I still think we're going to go up from this. But again, Credit Suisse just cracked down to 179 here. So we might buy this dip, to be honest, with small share size, just to mess around with this. I can't imagine that we don't continue up from this. If we do end up dropping, I think the risk is justifiable. But again, great news all the way around for PPI. Much lower than expected. And if we do lose here, I mean, again, a little bit unexpected, but initially the reaction was positive. How is this positive? It's positive because it means less inflation problems. But again, it could also mean that the market is pivoting to more recession fearing. And so if we do start breaking down, that does signal that the market is now fearing more so than inflation, a recession. You know, if the market's fearing a recession, then it will react negatively to this data. And so, again, like we said earlier, there's a balancing act for sure. Generally, though, with the latest inflation-fearing market, this data is going to be overwhelmingly positive. All right, guys. So market is dipping down though, which is honestly really surprising. We're still pretty flat, but the data did come in positive. And again, for people arguing about whether this is positive or not, again, all I can do is go by historical numbers and reactions, right? Over the last year, lower than expected PPI in an inflation fearing market has been seen as positive, right? Currently, what's dragging the market down despite this, though, is Credit Suisse. As we said, Credit Suisse, yeah, and we're going to go ahead and cut this. And we might get faked out and we might bounce a little bit here. But what's dragging the market down is Credit Suisse. Credit Suisse, as this report dropped, cracked lows down to 180. So yeah, good luck, guys. I hope you guys make some money. Yeah, it could be investors are waiting, or it could be in the markets fearing a recession. Again, I think I'm always pretty clear, which is that, like, you never know 100% what kind of reaction we're going to get. I say that a million times. And so holding me to what the most likely response is going to be to this PPI data is silly. It's just, again, you never know what kind of report we're going to get. But what we will say is that generally the market has been overwhelmingly fearing inflation. Of course, you never know for sure, obviously, and the market's dumping down. And so, again, what this means, the market reacting negatively to this, what this ultimately means is that the market is now fearing in recession more so than inflation. If the market was fearing inflation more, it would react positively to that data. So what this means here, guys, is that it means that the Fed is the most likely now to pivot to zero rate hikes, is my guess here. So on March 22nd, because of this reaction here, the Fed is the most likely to pivot to zero rate hikes, is what my guess is. Again, not 100% sure. Let me know what you guys think. Yeah, for sure. It could not gain traction or all that stuff too. But again, I think there's a chance we go pivot to zero now. If the market's reacting bearishly to lower PPI data, so lower inflationary data showing that inflation is less right now, if the market's reacting negatively to that, again, it means that the market's fearing a recession. And again, what that means is that the Fed might pivot to zero. Again, I'm not saying they will. I really don't know. Well, yeah, what, bro? This is suddenly jump from ETH. Yeah, I mean, Bitcoin and other stuff are probably going to react positively to this data. I mean, it's going to be seen like, okay, this just means prices are lower. It means lower pricing, which is good. It's overwhelmingly good. Everybody's screaming and crying about high inflation. This is overwhelmingly good. Regardless of the market reaction, it's probably going to be seen as a positive for inflation. One of the reasons this is dropping, or it could be one of the reasons, is Credit Suisse breaking lows kind of as the report came out, and so that's one of the reasons the market could be fearing a recession, is because Credit Suisse, and my guess is other banks are doing this as well. Let me see. Yeah, so banking starting to test lows as well. The reaction was initially positive. We did rip up from it. We just didn't hold. Yeah, for sure. Well, no, Credit Suisse is definitely the reason the fear is in the market today. It's one of the reasons the market dropped so heavily overnight, is because Credit Suisse, basically the SEC said they found material weaknesses in Credit Suisse's yearly report, and they contacted Credit Suisse, and Credit Suisse disclosed their interpretation of it, which was not good. Basically saw a lot of risk for Credit Suisse. One of their biggest investors is not going to bail them out of this. And so all of that is pretty rough for Credit Suisse. And that's essentially dragging the rest of banking down, which in turn is dragging the rest of the market down too. But these are fundamental weaknesses in banking that is kind of dragging everything else down. And it's still a little early. It doesn't mean too much yet. But yeah, strange response to PPI data, strange response. Bearish or bullish? Again, we can only look at historical data. Over the last year, the PPI report we got today would be interpreted as bullish 100%. But right now it's not. Right now the market's dipping down, which again does signal recession fearing because this is inflation data, right? So if lower than expected inflation data is going to be interpreted as a negative, it means that the market's fearing a recession, which is an interesting dynamic leading into the next rate hike decision in a week from now. And exactly a week from now, next Wednesday, we get the rate hike decision in the Jerome Powell press conference. That is going to be a really interesting report here, because again, it could mean that the Fed is going to be less worried about inflation. And if the Fed is less worried about inflation and they're pushing for GDP growth and economical growth, then I question what they're going to do for their rate hike decision, and that'll be interesting for sure. Yeah, it doesn't seem to be positive enough to. It was honestly pretty low for everything here. But again, we keep dipping. I'll buy this dip in a heartbeat, dude. It just depends on what sets up well enough for it. I don't know if I'm going to get exposure to banks, but I will buy some dips here for sure if we continue to drop. I think there's some. I think we got enough time for a rebound to start heading into the rate hike next week. That there might be some solid little dip buys to get involved with, but maybe not. I'm going to take my approach to my dip buys today are going to be very small size, where I can continue to add to them if they continue falling. Like we did it with Disney this morning. We're green on Disney so far. We did it with Google this morning as well. And we will cut this quickly if it goes against us. Catch that falling knife? Yeah. I mean, catching that falling knife has made me a bunch of money. Again, I always think like, okay, you always got to understand, like people can criticize, but I'm green on the year on Thinkorswim doing this exact same thing, And so it's like numbers can kind of overshadow any other criticism. I'm very profitable doing this. I would say my accuracy rate is at least 70 to 80%. Buying dips like this, like today, especially dips like today, where we have positive data and the market drops. My accuracy is very high doing this. And so again, I get it. People can be bearish, and that's fine. But what y'all really have to understand is that this is a swing trading strategy. And so this is not meant to hold super long unless I really make it that. Like I can hold it long if I need to, but it's not really meant for that. What I'm looking to do is take advantage of small little bounces, but I'll also scale in. Like if Google drops down to like $85, $80, I think that's a good enough entry to sit on for years if I need to. If Disney drops down to $85, $80, I think I could sit on that one as long as I need to as well. So again, criticizing by saying catching a falling knife isn't people can criticize it, but again, I'm green on the year doing this. I mean, day trading, I do a very similar strategy to this, and you can see my graph here as well, So, I mean, like I said, my swing trading strategy is simple. I look for big overreactions on the downside. I buy it up and I sell it quickly once I'm in profit. Yeah, I don't know. I don't know. Again, same traders buying trades at the top. Like, again, I think new traders enter the market. And when new traders enter the market, they have the mindset of like, if they see a big 20% gap up, they say, oh, this has got to be strong at the opening bell. It's going to be strong. Experienced traders understand ranges in that regard, where experienced traders usually are buying pullbacks. That's the most powerful way to trade, in my opinion, is to buy dips. With extended on the downside movements like I just did, and we're up on both of these so far. And again, I'll take profit quickly if we need to, but again, I'm looking for value. And again, I can hold these blue chips very long term if I really need to. It's not really about short term price action. What matters the most right now, though, is banking. And so I think there are some risks, because I think if we start to get really big weakness in banking continuing on, we already have big weakness, but if the weakness in banking continues, it can trickle into everything else. And that's certainly a risk for sure, without question. The weakness in banking was so strong that it still didn't counter PPI data, which was overwhelmingly positive. And so that just kind of shows you how weak banking is. But the other side to that is that banking is down big percentages over the last couple of days. So there might already be some extension on the downside for some of these, but I think it depends on some. I think First Republic is incredibly risky right now, but I think JP Morgan and some other stocks, if they continue to fall,
There might be some arguments for some dip buys there too, but of course, I really don't know. As of now, I'm taking a very cautious approach and just trading small. Hey, congrats, Guts. Hey, make your money, brother. I'm happy for you, man, for sure. Hey, thank you, Crypto Cognition. Thank you, brother. Yeah, I appreciate it. Yeah, but John, I'm again, you got to understand the way I really trade, which is this, right? To understand how I'm trading, think about it like this. Okay, what I buy are only blue chip companies. Like I'm buying blue chip companies that have like that. I've looked the stocks up that I'm buying. They don't have much exposure to banking, at least the banks that are failing. And so I buy blue chip companies, and I'm starting out like I got 25 shares of Google, very small. 25 shares of Disney, very small. And so what I can do is I can let this drop. If it drops, I'm still going to be fine. It's such a small trade that it doesn't matter that much. But what I can do is I can slowly scale into these if the market continues to dip more. Like, so if banking continues to trickle into everything else and drops the market, I can start to add more to my position if I choose to. And that way, if it goes in my direction initially, great. If it doesn't, I'll scale into a decent position. I don't mind holding Google at 85, $80 a share for a long time. I don't mind holding that for an extended period of time. I think that's a cheap price overall with objective value. And so I can sit on that thing for years if I need to. I think the biggest edge you have long term is blue chip value investing. But again, as I've said many times, I certainly understand the risks short term, because if banking gets out of control, it can trickle into everything else, and that can tank the market here. What's going to mean the most right now is what happens to Credit Suisse, because that's going to affect every other bank in terms of sympathy, as well as the rate hike decision that they make next Wednesday and exactly a week from now. That's going to be incredibly important data to look at. So just be careful, guys. That's all I'm saying. We could have potentially big downward moves. We could have potentially big upward moves as well. Right now, the market is down for sure. But again, the banking is the question mark here. What happens to banking is going to influence everything else. Yeah, big banks are not going to fail. If they don't raise rates, inflation will be back. Yeah. But again, I think the question is, does the Fed pivot right now? Also, guys, y'all check out Top Step. Top Step is a funded account program for futures. And so if you want to day trade this volatility, here's the SPY on the left, which is influenced by this big data. Here's the futures contract of essentially the SPY. You can see it's the exact same price action. There's no PDT in futures, though. So while you can't trade this left side here, the stock, the SPY, with no PDT restrictions, you can trade futures with no PDT rule. You can day trade short with a margin account without restriction. Top Step is the most legit futures program in the world for funding. They've been around for over a decade. They fund thousands of traders a year. They pay out millions of dollars every year in actual withdrawals from their funded traders. And they're the most legit futures funded program who everybody else copies off of. And so the big edge here is that you can test your skill without taking on risk. You can get exposure to day trading without taking on risk. And again, there's no PDT in futures. And so what they do is they give you a demo. If you can hit the target on their demo while following their rules and conditions, then they fund you between $50,000 to $150,000 in legitimate proprietary funding with a 90% split. And so if you get funded by them and you can pass their profitability test, you can get funded between 50 to 150K. With 90% profit split, which is a great split, by the way. And what that allows you to do is take on the risk of pressure of trading. You have some pressure. You don't want to lose this funded account program. So it's not like basic paper trading. But if you lose it, it's not the end of the world, where if you put up the money yourself in futures and you risk that, you're going to lose thousands of dollars a lot of the time. So this is one of the ways you can get exposure, where you can test your skill. If you're ready to trade, you can potentially pass the funded program. If you're not ready, which a lot of new traders are not going to be, you're down $140 a month and you can reset it for $100. And so it's overwhelmingly cheap considering the risk that you would take trying to do this in futures yourself. And it's just a great way to get started, test your skill, all that good stuff. If you want to check it out, here is the link. Great way to help support your boy here. They are a sponsor of my channel. But yeah, there's the link in the description. You get 20% off if you use my link. Yeah, Credit Suisse is starting to bounce back, and it's making everything else bounce back so far in banking too. Credit Suisse back up to 188, hit 176s. So again, we did buy a little bit of the Google dip. We did buy a little bit of the Disney dip. So the leverage is 50K. So you get 50K in buying power. You get 150K in buying power on the top one. But again, it's just so much cheaper. Like, again, the big thing to understand is that 90+% of day traders lose money. And so as a day trader, you can either trade the S&P 500 futures contract, which is essentially getting exposure to stocks without the PDT rule. If you do it yourself, you can either do it yourself and risk thousands of dollars, putting up 15K yourself, risking thousands and thousands of dollars, or you could try out a funded account program. And if you lose the funded account program, it's so much cheaper to lose the funded program for $100 or $140 than it is to put up the money yourself. And so you can still test your skill, still see if you're ready. If you're good enough, you can get funded, and with a 90% split, so you're keeping most of your profit regardless. But if you fail it, like most people are going to be honest, it's not the end of the world. And that's the true edge of it that a lot of people don't understand. You know, a lot of people are like, oh, those funded account programs don't work, but they're sitting there putting up, you know, $10,000, $15,000 themselves, losing thousands of dollars regularly. And they don't understand the edge the funded program gives you. We are getting a nice bounce here. So we are green in our Google trade. Again, we're going to let this work for some time. We're going to just sit here and sit tight and let this work some. Pretty flat on the day. But that's only because we took some losses earlier. Yeah. All right, guys. Market's been bouncing back up. Again, our Google and Disney trades are doing pretty well. All right, guys. Market's bouncing back a little bit. E-mini is up there. Watch Credit Suisse, though. Credit Suisse is going to be the big reaction to this. That's going to be the real thing to watch is Credit Suisse. Credit Suisse is going to influence everything else, with banking especially. Also, do me a favor, guys, and hit that subscribe button if you haven't already. We appreciate it for sure. All right, Credit Suisse at 184s here. Hey, nice, Aaron. Thank you, brother. All right, congrats, Aaron. Nice work, bro. Credit Suisse basically is in a little bit of trouble in terms of their books, essentially. So Credit Suisse essentially found material weaknesses in some of their business structure and models right now. Yeah, it'll be interesting. Yeah. Tatted Trader, if it's blurring, it's on you, brother. It has nothing to do with me. But yeah, Credit Suisse in a struggle right now for sure. And again, watch it. It's going to influence the market heavily today. All right, guys. Credit Suisse back up to 190s here. This should be seen as a positive right now. We didn't get enough dips for me to really add any more to Google or to my Disney trade, so we're still pretty flat on that. But we got time to let that work. I don't know what we're going to do now, Eric. I really don't know. I think it's more likely that we do pause a rate hike, at least currently with better inflation problems and more reactions to the downside on PPI data. I think it's more likely that we pause rate hikes. But again, I really don't know. As I always say, you know. Credit Suisse is back up to 190s here, starting to rebound back up. But again, interesting enough, what this means is that the market's more so fearing a recession right now. All right, just kind of sitting tight here, guys. Just kind of sitting tight, waiting for something good to show up. Not really any trade edge right now. We're pretty flat on Disney and Google as we speak here, so pretty flat there in that regard. Again, if you want to, again, you saw me on Top Step and you saw me talking about Top Step. Again, check out Chart Prime, man. Chart Prime is actually really cool. Chart Prime. Use it in stocks, crypto, forex, futures. Market opens up in about 30 minutes. But yeah, Chart Prime can be powerful, man. Like, look, again, here's yesterday's data. So just like look at the accuracy of yesterday and the day before's data here. So like, let's just look at the last little couple days of this data. Right, so let's look at the last couple of days here. And this is Chart Prime, Trading View Indicator Search. I'm going to take the chart patterns off. You can see the wedge patterns that it's drawing for us, which are pretty cool, to be honest. But like, let's just look at the last day's data. All right, so like, look at this. All right, like, let's start at the opening bell here, which is just really interesting. Look, reversal down signal, drop. Reversal down signal here, we get a drop. Reversal up signal there, we get a bounce. Reversal up signal literally at the very bottom of price action. Over the next couple hours, we get a bounce. This is on a 5-minute chart. Reversal up signal here, we get a nice bounce over like hours. Reversal down there worked. Look, reversal down literally at the very top of this price action. Huge drop afterwards. Reversal up. We get a nice bounce back up there. Look, reversal down, drop. Two bullish engulfing candles down here. So bullish alerts. And we have the dotted support line, which is the strongest support or resistance line on the chart, is this dotted one right here. Huge bounce over the next couple hours. Literally right at the very top. Reversal up or reversal down, drop. And so I can't fake this, right? This is a sponsor of mine, and so I'm certainly biased in their favor. But I can't fake this, right? It's $35 a month. You get You get Market Oracle, which shows you reversals, automatically documents support and resistance. You can show chart patterns. There's oscillators. 35 bucks a month. Very, very cheap right now. They are a sponsor of mine. It's called Chart Prime. Check them out. So it's not for stocks. It's not for Forex, that one fit. It is for futures. Yeah, things change super quick, Eric, super quick, man. In terms of, well, and understandably so. I mean, we got the Credit Suisse disaster. We got the First Republic. We got Credit Suisse. We got SIVB disaster that spiraled banking. All right, so while I got a second here, I'm gonna mute the music for just a second, guys. So bear with me. Um, all right, guys. So yeah, market is chopping back and forth, up and down, up and down. Again, Google Trade is doing really nicely. We're in Google right now. Yeah, Chart Prime works with the E-mini. You can use it on the E-mini. You can use it on stocks, crypto, Forex, futures. Man, this is loud, bro. They got these notifications going hard up there, man. Let me find this. Hold on one second, guys. All right, guys. All right, guys. Market's consolidating back up. Tesla rebounding a little bit. Credit Suisse is pulling back some, though. Let me close. Let me do another poll here. So we got the poll done. We asked people, what does PPI show up as? And now we're going to ask people, do we rebound from the drops today? So basically, do we rebound today? Do we rebound today from this morning's drops? Let me know, guys. There's the poll. Vote on that poll. All right, we can try a different device here. Let me see if that works. All right, guys, market is popping back up. And again, we did dip by Google here. It's turning out really, really nicely. I'm loving life in that one. I think today we'll also break 103,000 subscribers, team. So if you have not already, hit that sub button, hit the notification bell. I certainly appreciate it. So again, I'm testing out. Yep, same platform. Yeah. I'm kind of talking with the YouTube chat right now. But yeah, so got a little bounce back to 93s here. My average on Google is 9260s. So not a bad little rebound, but it's a small share size. Yeah, so inflation versus banking, a really interesting dynamic today. Oh wow. Yeah, I can see that too, man. That's cool. Actually, pretty cool. Actually, this is actually very useful. So I didn't even know you could do that for TOS as well. So thank you for that. That's actually pretty useful. Bull trap. Everyone buying above this level is screwed. I don't know necessarily. It depends on it really depends on what Credit Suisse does today. Now, if that drags the rest of the banking down, then it doesn't matter. And again, I'm not against bears, but every single dip buy I've made over the last 6 months, bears have made fun of the trades, and I'm green in a large majority of it. So they make fun of the trades. They're like, what a joke. This dude's buying up stuff, they always say. And then, when I'm green a week and a half later, crickets usually. They're just kind of like, oh, quiet. They talk about something else. They don't really talk about that. And so, again, regardless of your bias, you might be biased on the bull side. You might be biased on the bear side. Regardless of that, I think you got to just let people take trades, not try to shame them for taking trades, not try to shame them for having bias in one specific direction. I'm just going to keep doing what I'm doing because it works. But again, right now, I'm pretty flat at everything. I'm holding a very small position in Google, a very small position in Disney. But again, if we drop, it's not going to be the end of the world for me. I'll probably add a little bit more to Disney, depending on how low it gets. But it also depends on what PPI shows up as well. Would you sell all banks today? I'm not shorting anything. I don't really buy bank stocks, brother. So I don't really like bank stocks to hold. I think the risk is a little bit too high. I would rather buy other stocks, not related to banks. Oh yeah, selling pressure is certainly there. And again, with a negative reaction to lower PPI data, which again generally is going to be interpreted as positive, right? So PPI data was positive. What happened though is that the Credit Suisse fear is causing recession fears, right? So that's trickling into everything else where people are worried about a recession now because the battle always, guys, is again, we talked about this, a month ago when the last rate hike situation is the battle is always recession versus inflation, right? Whatever the market fears more is how the market's going to react. If the market is fearing a recession more, then they're going to want economical and GDP growth. They're going to want higher prices. They're going to want higher retail sales numbers. If the market is fearing a recession, they're going to want higher numbers in that regard. If the market is fearing, they're going to want if the market's fearing a recession, they're going to want low unemployment. They're going to want higher prices numbers. If a market is fearing inflation, like we have been for really the last year straight, the market is going to fear high prices, and they're going to react inversely to more economic and GDP growth. So that's the nuance of the market. And again, right now it's a really interesting spot where we have the rate hike decision in a week from now. Inflation data came in better than expected for sure. Again, I don't think it's really arguable that it was better than expected. The market still reacted negatively because I think of banking fears. But the only one that could be argued as negative is retail sales. Retail sales is the one where they could say, oh, well, that was much less than expected. And so, we want more sales because we want economical growth. But it really depends on what happens with banking. What do you think of Bank of America? They've been getting billions in deposits. Chase too. Yeah, the big boys. So when you have weakness on the other banks, the small banks, when you get weakness on the little banks, people are going to lose confidence in the little banks, and they're going to flood to the big banks. Um, You know what I mean? So like that's the thing to understand. When you get weakness in little banks, people are going to lose confidence in those little banks when they start to fail, and they're going to flood to the big boys. That people are going to flood to banks where they assume that they're too big to fail, and to a certain extent, they're correct. Bank of America, J.P. Morgan, Chase, those are banks that are not going to fail. If they started to, the government would bail them out. So people are going to flood to those, and they're going to start leaving these little baby banks like Regions or Uh, the little baby banks. I don't know who that is. All right, market's very choppy at this point in time. Very flat, very choppy. Yeah, that's Bruce. Is Schwab rebounding? Okay, I'll put the music up. I got you. Let me know if you can hear it. You should be able to hear it. Best books for day trading? I mean, I don't know if a book is the right thing for day trading. Um, so it depends. Like books are not the easiest way to learn things. Like you can prefer books, and that's fine. But books are not what you want to learn from most of the time. Like books are going to be very difficult to learn day trading on. You're not really going to learn much. You can hear perspectives in day trading, and like stories. Like you can essentially hear stories about day trading in books, but like and like maybe psychological um, education in books. But aside from that, you want videos almost certainly. Like you don't want books necessarily. Books are going to be really hard to learn day trading on. I don't think you're going to have much edge learning in books. Yeah, for sure. Experience. He only put everybody reads his Facebook. Yeah, you could have good day trading books, but like they're not all good. All right, guys. There you go. All right, market bouncing back a little bit up to 385.07. So pretty flat all the way around from PPI data. And so again, there is a battle going on between like inflation and recession fearing. So we're essentially flat. So yeah, so Tesla bounced back up a little bit. We're right at 385, and again, it really depends on what the market open looks like and what Credit Suisse is doing. Credit Suisse is at 180 right now. Also, banking sector as a whole is pretty weak. Yeah, so recession fears causing better than expected data. Yeah, we got the music back. Sorry, the comments might be a little loud. All right, guys. So market is bouncing back up to 385. I'm not sure if it's going to hold. It probably has to do with Credit Suisse rebounding up to 183s here. But Disney trade's actually looking really nice. It's over 93s now, and we're going to keep riding that one up too. Yeah, Trading in the Zone by Mark Douglas is probably the best trading book ever made. You know, widely agreed on, I think, as well. Yeah, I mean, losses build up. Hey, thank you, Saraf. Yeah, I mean, books are good, just not trading books, man. Trading books are relatively useless, except for like a couple of them. The rest of them are just nonsense. Like most of the other ones are just people patting themselves on the back. Like trading is this really interesting dynamic where you got people that are just pretending to be more profitable than they ultimately are. Right. And so you get a lot of that in trading because a lot of them are trying to sell you stuff. And then some like people fall for it and they're kind of gullible in that regard where, you know, they want a guru and the gurus are charging them thousands and thousands of dollars over nonsense mentorship where, you know, they're not really getting anything. And it's kind of like a placebo effect because they're spending so much money for it that they think it's just crazy valuable. And I think certain people are more gullible and more prone to kind of fall for that thing where they need a quote unquote mentor to help them. I think, you know, I think if a free mentor is useful, of course, I'm not talking about free. I'm talking about don't spend $5,000, $6,000, $7,000 paying some random dude on the internet to mentor you when he's got 1,000 other, you know, clients. That it's just useless. It's a waste of money. It just causes that person to get rich and you sitting there feeling frustrated. But you know, learn to trade, and losing is going to help you learn a lot more. It's going to build risk management. When you have that burn of losses, you don't want to lose it again. Okay, maybe this is a UPS driver here. Oh my goodness. Oh, it's center. Here, hold on. Hello. Hey, good morning. Hold on 1 second. I'm sorry. Sorry, guys. We're getting a generator put in here, so that is actually my energy company trying to get into my house. I gotta open the gate for them. So I'll be right back, guys. Yeah, sorry. Hey, what's up, Emmanuel? Hey, what's up, brother? Yeah. So again, we'll see if the market bounces back. But yeah, I'll be right back, guys. Hold on 1 second. All right, we're back. Sorry, I had to go get Carol to go help me out. Yeah, so Derek, so good PPI result, but opposite response. And again, I think you got some people that are arguing with me that PPI was seen as a negative, and it's just not. Like lower prices is not going to be seen as a bad thing right now. The reason the market's dropping is because of Credit Suisse and bank fears. At least that's usually what happens. As I say before every release, though, like I've been basically right about almost every single report that we've had over the last like 6 months in terms of reactions. But it's not a perfect science. Like you don't ever know exactly what's going to happen with this report. You don't ever know what kind of response we're going to get from these reports. It's always kind of up in the air because the market can always change their mind. What I will say is that we did buy some dips. We're in Google right now, and Google's all the way up to 93.30 as we speak here on Google. Our entry price is 92.60s. So I don't know what I want to do with this one. I think I'm just gonna let it ride. Market's bouncing back a little bit from where we bought the dip as well. Um, they want to steal my stocks. So dumb, a lot of FRC shares. Man, look at Disney. Hey, market rebounding here. This is what I'm saying. People make fun of me of buying these dips, and they say, "Oh, what a perma bull," And it's just kind of like, all right, well, I'm up like over $1 per share within like what 10 minutes. Uh, up over 1% in about 10 minutes. I'm gonna go ahead and take a little bit off because I can. Um, so yeah, we're gonna go and unload Google here. You love to see it. Uh, and this is what I mean. Like you buy emotional overreactions. Short term, we don't have to hold it forever. But yeah, we just cut 40% of that trade off. But I think that's my point. Is that it's like people can say whatever they want. Like what I do works. Again, you can't look at something like okay. I think the easiest thing that people see here is, or one of the things people see here is that like you get people who, if they're bearish on every time frame. And I think that's a very short-sighted view of things. I think you have to look at it on multiple different time frames. And I've said this before, but like short term, I think we're extended on the downside. I think the inflation data was positive. I think that the reaction was big and profound quickly. And I think that made more sense to just buy up a small little dip. And that's exactly what we got. You know, that's exactly what we got. And vice versa. If we get a big reaction to the upside, I'm going to probably liquidate some positions. Um, and it doesn't actually mean anything yet. It doesn't actually mean we're going to keep moving up. It doesn't actually mean like I'm taking profit now because I'm not looking to, hold this long term if it gives me that much profit so fast. It doesn't matter, you know, uh, because we can take it again. If we can get over 1% in 10 minutes, I'll take it. But what matters the most right now, though, is Credit Suisse. So Credit Suisse is going to matter the most. But again, you got to look at it from every time frame. Again, short term, I think we're probably a little extended on the downside right now, and so I think it's more likely that we're going to bounce, but it could do anything. I don't really know. I think if we look at it over the last 10 days, though, the market is obviously weak. If we look at it over a 6-month period, the market's slightly green over a 6-month period, slightly green. If we look at the market over a yearly period, the market is down over the last year. If you look at a 20-year period, the market is green. And so it really is relative to time frame. And I get it, people are bearish, and I understand. Like, I really do understand. I'm pretty flat on everything right now. The only thing I'm holding is less of Google now, a small Disney trade that my plan is really to scale it as we keep dropping on Disney. And I'm just kind of starting that position now. But I'm basically flat on everything else, because again, I don't trust the market right now. I think because the market is fearing so much banking problems, if the banking crisis spirals out of control, the market can drop, certainly. And so I'm not a perma bear in that regard. If I was a perma bear, I'd be in huge positions looking to just make a bunch of money right now. And I'm not. I'm pretty flat because I don't trust markets right now. I think there's too much risk in that. And I think the market can really get affected by this banking thing if it doesn't get it under control quickly, which would be interesting to watch what happens on the 22nd of March, because that's what's going to influence everything, I think. FRC? Yeah, we can look at FRC. So FRC is First Republic. It was the other bank that really got negatively affected by this banking crisis. So the first one was SIVB. Right, SIVB got halted a couple days ago, still hasn't resumed yet, basically getting destroyed as a company. FRC was the other one. WAL was another one. But FRC is one of the other kind of people that they're fearing in this, right? So it's one of the other banks that people are scared of right now of collapsing. So again, FRC is relevant because it's down so much already, and it's kind of spiraling out of control with Credit Suisse. So that's the nuance to watch of it today. Yeah, I'm holding AMC, but it's a very small trade. Do I look like a cat to you, boy? Super Troopers, huh? Yeah, I think that's probably a pretty okay move, moving money from small to big banks. I think that makes sense. I think. All right, market bounced fast and then rebounded back up. But look at FRC still test these lows here. Credit Suisse is approaching lows of the day now too. So Credit Suisse is getting there. But market all the way back up. So market's still doing pretty well. Disney popping back up. Now green and Disney and Google. So both the dip buys are now green. All right, so look, FRC just dumped under lows here. Credit Suisse approaching lows as well at 175s. Oh man, I forgot to put yeah, let me get ready to trade futures here too. There we go. We're ready. Green on the day so far. I got a little bit of a cushion today. But hey, Disney doing good. Google looking good. We'll see if they rebound after the open. We're basically flat from this report. All right, so guys, we got less than a minute. Less than a minute. All right, guys, here we go. Market opens up in 20 seconds. 20 seconds. All right, guys, let's do this. All right, guys, here's the opening bell. Market's pushing up from it. Let's see if we continue. Oh, wait, there we go. Sorry. Sorry, I had to take off my sweater. I lost my other headphone. I'll have to find it. Market is overwhelmingly popping up, though. That's nice. Look at the huge rebound here. And again, I mean, this is my point here, guys. Like, this is my point, is that emotion here, okay? You know how many people made fun of me for buying this dip just now? Google just broke highs. Again, up to 93.70s. Now, again, we've already taken profit. We'll take a little bit more off of Google now that we're at the top here, and we'll not worry about that one so much. All right, so now the majority of the Google trade is taken off. We've locked in profit there. All right, market's still ripping. We're gonna leave some shares of Google though, but most of it's off now, just because we got such a quick rebound. We rebounded essentially from 92 to 94 in about 30-40 minutes. So I mean, I gotta take profit if we do that. And there's a big rebound, even some more. About to break highs again, potentially. Huge rebound back up here, guys. Wow. Look at the market all the way popping up to, again, need I say more here, you know? Like, people can keep making fun of my dip buys, but I mean, hey. You love to see it. Market popping back. Let's look for a pullback now. Daylight savings time, already. This is what happened, brother. Daylight savings time, man. My name is John, but that's okay. You can call me James. That's all good. Top 3 Jameses in the world right now. Market's trying to bounce back. Let's see if it holds here. We got a lot of up wicks, though. So I'm going to wait. I need a larger pullback before I'm really necessarily comfortable enough buying this dip. Again, when everybody else is screaming fire, I'm usually buying stuff. And people make fun of me every time. But then, like I said, it's just kind of crickets afterwards when we rebound like this. Like, again, it's just kind of crickets. It kind of goes to show, like, I know what I'm doing here. I'm not just randomly buying it, you know. I understand extension, especially we get something like, again, here's another example of it, right? Netflix, when they did their earnings, they dropped like 20%, and they had mixed results. It wasn't even like terrible results. It had mixed results. Amazon, or no, it was Netflix. Netflix dropped like 20%. It might have been Amazon, actually. One of those dropped like 20% from it. And so when everybody else is saying, oh, Netflix is done, Amazon is done, it's down 20%, and everybody else is buying put options and shorting, I'm like, hey, this wasn't even that bad of results. I kind of buy up that dip. And within 3 days, it rebounded like 15% or more, you know. And again, crickets. Snapchat was down at $7.80s, $8. Again, same thing. Everybody else screaming, oh, weak. I bought it, rebounded $10 within like a week or two. And so my point is like, you're going to get stuff like happened. Google breaking highs again, just broke highs of the day again. And again, we're still holding a little piece of this. We'll let it work. But again, fearful when others are greedy, greedy when others are fearful is a real thing. It's something that really important to understand. Again, when a new trader, and again, you gotta like, I don't root for my side like I'm in the Bloods here or Crips. Like, it doesn't matter. None of that matters to me. I don't care what direction we go. I'm just looking to find discrepancies in emotion. And again, so if everybody else is making fun of me for the trade, it's usually a pretty accurate, profitable trade. You know. All right, Google tapping all the way up to 94 plus here. We're up about $1.50 a share. You know, roughly 2%. A little bit more than $1.50 per share, over 2%, or a little bit under 2%. Yeah, we're gonna lock in some more profit here on Google, because I mean we bounced back 2% in like what, 30 minutes. We are now green in Disney as well. We're letting that ride back. Gonna hold a little piece of Google, let it work. There's a big pullback finally here, but locked it in right around the top for Google. Now maybe we could buy this pullback. I'm gonna wait. We already maximized the profit on those trades, and so we're just going to sit back and let it work now. Again, the thing though, right now, I think we could reverse back down, but so I'm not really buying this yet. I don't really trust this. My entry was the lows at pre-market. So Google testing highs of the day. But I guess this downwick doesn't look that bad. But again, I don't know if I necessarily trust it. Hey, thank you, AV. I appreciate it, man. James John. Samson Simpson. Let me talk to Samson. Fly me to the moon. All right, guys. So again, we got a little dip. I don't know if I trust the dip. Actually, I might buy this right now. One contract though. It's very small. Oh, what is this? What did I just buy here? Oh no, this is Dow. Oops. I'm dumb, guys. I forgot to switch the contract over. I can make fun of myself though. Dumb mistake here just now. My bad, guys. I blame you guys. Y'all should have corrected me there. But yeah, now we'll take 2 contracts of this. Luckily, we were green about the same amount on the day, so now we're about flat. Unfortunately, we gave back our profit with that silly mistake, but I can laugh at it. All right, we got 2 contracts here. We'll see if it bounces back. Hitting the volume weighted price now. I will cut this fast, though. Like I said, I think we could reverse. And if we do reverse, I'll pivot to a more short-based day trading strategy. About flat on this one. Yeah, I'm going to cut it. Too much risk. Okay, so we actually didn't lose as much as we thought we did just now on the Dow trade. So yeah, you can kind of see today. So we are down, right? Or we're up about $37. So we're pretty neutral now. Unfortunately, could have been a lot better, but you know, it's all good. Hey, thank you, Sir Vico. I appreciate you, brother. There's the bounce. So it got faked out there too. But I think I was letting the last trade kind of influence my position a little bit too much, which is okay. We bounced right at the volume weighted average price. There's the move back up. Again, the good thing is that my other trades are doing well on the TOS here. Disney's up nicely. Google's up nicely. Is James my new name? And so now at this point, we're not going to be, there's no chance we're going to be red on Google. We've already scaled in enough profit and unloaded most of it. So there's 0 chance we're going to be red. Now we just essentially have to wait to see if we get some good entries and all this stuff. All right, Disney's still popping up. So our entry on Disney was 91.90s. We're at 92.20s right now, almost 92.30s, breaking highs as we speak here. So that trade's working out really well too. Do we have business inventories at 10? All right, so again, like I said, I kind of stopped my trading. I think there's a chance that we reverse here. I think you got to look at Credit Suisse has been rebounding here, which has kind of been what's helping the market up. Because without Credit Suisse dropping, the market's going to react positively to the PPI data, which is kind of why we rebounded like we did. But again, Credit Suisse is now pulling back some. It's down to 190 right now. It's right at the volume weighted average price here. So you can see the market pulling back, kind of following it in other bank stocks right now. I like this down wick. We got one contract here. We might add a little bit more, but there's the pop. See if we can get up a little bit higher, test highs. Might scale in a little bit more since my average is good enough. Down a little bit here. I want to see if this reverses back to green on the trade. Credit Suisse bouncing back up. I think the market really is following Credit Suisse a ton. All right, we cut a little piece of it there just to lock in some profit there on the day. Protect the trade a little bit. We'll maybe add some more to it if it sets up, or maybe just hold this. Again, Credit Suisse is bouncing back up to like 192s. So we'll see if the market follows it. Looks like it wants to, but also we're right at the highs here. So all right, there's another pop up. Am I frozen? Okay, there we go. Huge rip up. All right, let me go ahead and take that off. All right, so we just covered that. We're back up to where we were prior to the dumb mistake we made this morning. Nice little green action. Looks like I was wrong about my reversal. Huge rebound here, guys. And again, my point remains, team. Okay, fearful when others are greedy. Greedy when others are fearful. When everybody else is shaming you, you're probably doing the right thing. Beautiful rebound up to 388s on the SPY. We're going to go ahead and lock some profit in Disney as well. We are up enough to where we are nicely green in that. We're going to go ahead and lock the profit in, protect the trade, and just sit on the rest very patiently. Nice little green action so far today. Hey, where'd my permable callers go? You know? Yeah, you love to see it. Again, the whole point, again, you can understand the strategy. Number one, way better at swing trading than I am day trading. By far better at swing trading than I am day trading. And you got to understand the strategy. The strategy is you look for discrepancies and reactions, right? Stock has mixed earnings and overreacts on the downside, drops 20%. Everybody else is screaming it's going to fail. I'm buying that up if it's a blue chip. PPI comes in better than expected and the market drops, a decent amount. It's a pretty good little dip buy. You could logically conclude that we're going to rebound at least some from the overreaction to the downside. And of course we have already, even if we pull back now, we've still locked in green trades on everything. So, I mean, again, discrepancies in terms of reactions. You're going to have emotional people on both sides of the trade, on the upside and downside. Just my favorite way to play it is on the downside, buying up dips and looking for overreactions to the downside, and then buying the quick little rebound that we usually get. The key is if you're up big, you take profit. You don't get greedy, because again, a reversal could and can happen very fast too. And SPY basically rebounded. Again, I don't trust it enough. Hey, thank you, Brandon. I appreciate you, man. Thank you, sir. All right, guys. FRC rebounded all the way back up to essentially 36, and so it's not really failing yet. I'm gonna go ahead and liquidate the rest of my Google. I think take profit, lock it in, wipe my hands of it for the day. There you go, done. Not bad. Disney still in that one, and it's up nicely too. But we've already locked in a majority of profit there too, so maybe we rebound more. I don't think that matters too much. The problem though is like the people yelling perma boy at me, instead of learning for why I did what I did and being like, okay, well that obviously works. Instead, they're gonna just take me as a, they're just gonna get super weird about it half the time. And again, it's all love here, guys. Y'all can, we can have different opinions. I hope you guys understand. I appreciate everybody here. I understand there's gonna be bears, and I respect bears. I really do. I'm kind of bearish right now, believe it or not. Over a medium term period, I'm kind of bearish. I think that leading up to the rate hike decision on next Wednesday, I think there's chances that we could have some drops. But I think on the immediate short term, I think we're clearly extended on the downside, which just means that the probability of a bounce is higher. So yeah, it looks like cutting Google was the right move there. Yeah, I mean, I use extension, which is technical. So I use extension for sure. But again, I'm also mostly using economic overreactions. All right, so we got a nice down wick here. That's a very bullish sign. I'm going to buy that dip. All right, we're going to take half off there after the big emotional pop. These down wicks are technical in nature. So we're about flat on the rest of this. I don't know if I trust this one, though. The down wick is technical in nature, but it doesn't mean it's going to hold. Not necessarily, at least. Oh, I use different time frames to judge extension. It depends on how long I'm planning to hold the trade, but I also kind of keep it kind of loose where I'll hold it long if I need to, short if I need to. If it goes in my favor very quickly, though, I'll take profit quickly. All right, I'm going to cut that. All right, so again, here's my P&L on day trading on the day. We're green, but small. All right, guys. So again, hit that subscribe button if you haven't already. Hit the notification bell, guys. Hit that subscribe button. Sit back a little bit today. Haven't been the most aggressive. Again, I'm a little bit worried of a reversal here. So we're trending up, but not a huge amount. My stomach is not really treating me that well today. Any big movers tomorrow? No idea. Sideways action here. Again, we've already exited Google. Disney, we're right at the cusp of it, but only holding a very small position there left. Tomorrow, yeah, we got jobless claims tomorrow. We've got the Philly Fed index, I think, tomorrow. Let me see. But yeah, we got a bunch of stuff dropping tomorrow too. This 3-day period is a big day for releases. So yeah, we have jobless claims tomorrow, Philly Fed index, housing starts, import export prices, building permit data, the ECB rate hike decision. And there's the reversal we've been saying. Again, I don't know if it's going to continue though. We'll see. All right, so market's starting to dip down a little bit here, team. All right, bear with me. Let me get something ready here. $10 a.m. building inventory. Got you. All right, yeah, there's the reversal we were fearing here. Like I said, luckily we scaled out of basically everything ahead of it. Yeah, I might re-enter Disney here. You're just a realist, bro. I back you and trade with the same sentiment. Yeah, 100%, man. I mean, again, I don't sensationalize things. Like, I think a lot of people watch The Big Short, and they're just kind of like wanting to be the next Michael Burry. But I think that like a lot of it is also political in nature, at least from what I can gauge here. Like when I can analyze certain people who are kind of like aggressively bearish and toxic about it, where it's like they just kind of call names if I buy any dip and they just kind of try to make fun most of the time. Again, generally, and again, I'm not trying to get political. I'm pretty neutral politically. But I think most of the time they swing to one political party really, really heavily. And because of that, they want the current administration to fail. And again, I'm not saying I agree or disagree with any of that. And so they essentially want the market to fail. And again, I'm not saying that's everybody bearish. I'm not saying that's all bears. Again, you're going to have some people that is like, hey, that's not everybody, or hey, whatever. But like, that's from what I can tell what a lot of the like really, really like aggressive ones are, you know. People, it's the same people who sit around arguing about politics all day. You know, it's the same people. And again, for me, I'm very politically neutral, and so that just kind of rubs me the wrong way, I think. But again, I'm very bearish sometimes. I'm also bullish sometimes. It just depends on what happens, man. It depends on what the market is. Again, when the SPY was sitting at 410s and 415s, I wasn't telling anybody I wanted to buy it up. Like I said, I wasn't buying anything. I just basically called this reversal as well. If you guys heard me just now, I say, hey, I'm worried about a reversal. And we got a reversal there too. So right now we're sideways, but I'd locked in profit basically at the top. Yeah, of course. Listen, you could be bearish. I'm really not against bearish. Bruce is saying go long, maybe, bro. But again, I literally, for all those that are saying, oh no, you're bears, I just called the drop. I just said, hey, I think a reversal is going to happen. And we'll start to short if we start to break these lows too. It just depends. SLB extends to the downside. I don't know, man. We'll see. Again, I really do like regardless of what your political affiliation is, I can respect you as long as you respect me and you're not toxic. Like it's all love here. It really is. Like I said, I'm pretty politically neutral anyway. Don't want to go political. You know, I know that's a slippery slope, so I'll just say it's all love here, guys. Bro, I short every day. Most of the time, every day, almost every day. So little, you can tell you haven't watched the stream that much, brother, because I short at least 40 to 50% of days. I would say at least 40 to 50%. Most of the time, I make more money on the short side and day trading than I do on the long side by far. I certainly like shorting a lot more than buying. It's one of the reasons I wasn't attacking this long stock up here. So I short almost every. I short, like I said, I short roughly half the time. And I actually prefer shorting more than longing, because I think shorting is like taking the elevator. Longing is going up the stairs, you know, and the elevator's faster. Man, my stomach is feeling off today. I bought some kefir from the store yesterday, and I don't know how good that kefir was. It tasted funny to me, and now my stomach's like queasy. Wait, you're saying you watch me all the time, but you've never seen me short? Tell me you're lying without telling me you're lying. Chat, how much do I short here, team? Hey, maybe it's IBS. I don't know. Chat, tell me how much I short here. How many times do I short? Like, do you guys see me short? Be honest. If you're being honest and you really do watch the stream every day, you know I short pretty regularly. On the day trading side, I don't really take overnight short positions. I think holding short positions long term is going against long term edge of markets, which is generally, if you look at the long term edge of blue chips, it's that they go up. So I don't short. I don't short long term, but you better believe I short term. Hold on, sorry guys, I'm doing something with the crypto stream. There we go. What time is it now? I'm gonna make this 9:05. Yeah, I was born shorting. Lots of scalp shorts. Yes. Yes, you short often. Thank you. No, I'm like 5'11", so I'm not really necessarily like actually short. I like short shorts, and I cannot lie, you know. I was born shorting. You were just raised in this. I was born in this, you know. Whatever the Batman quote is. I see you do everything. Hey. Sometimes you short. That's right. Nearly every day. Thank you. Oh, now you're changing it up, bro. I see you. I see you, man. Hey, did anybody call this reversal? I'm just saying, who called this reversal here? Did y'all hear me call this reversal? I mean, listen, guys, let's just be real here for a second. I might have said, hey, I think a reversal's coming. And then, boom, we reverse. You see two things here. You see me buy the dip and scale out before we reverse. And then you see me stop going long because we reverse. Now, again, we're about to do a crypto show, so I don't have enough time to short the market for you guys today. But yeah, definitely top 3 shorters in the short world right now for sure. Definitely top 3. We'll see if the market continues down today, guys. But we are gonna do a crypto show today, so bear with me. Pun intended. See if the market rebounds back up. But yeah, with that said, though, guys, I'm probably going to go ahead and close it down, and we're going to pivot to our crypto show. So stick around. We are going to do our crypto show basically right now. And so don't go anywhere. If you want to watch the crypto show, we're going to be talking about shorts a lot. Again, check out Top Step. Top Step is the most legit futures funded program in the world right now. You can see my Top Step profit graph here. And again, we're pretty accurate. And this is the easiest way to test your skill in trading. This is the easiest way to test your skill in trading. You can day trade short in futures with no PDT rule. Top Step is the easiest way to test your skill. It's a funded account challenge. So they give you a demo. If you can hit the target while following their rules, they fund you between 50 to 150K with a 90% split. If you lose, it's less than 140 bucks. If you pass it, you get a 90% split. And they've paid out millions of dollars every year to their funded traders. So a great way to test your skill, get exposure to day trading without taking on a lot of risk. If you lose, it's not much, but if you pass it, there's a huge edge in that. And again, if you want to check it out, here is the link. Great way to help support your boy here in this channel. Also, check out Chart Prime. Chart Prime is a trading view indicator service that you can use in stocks, crypto, forex, futures. They give you a reversals alerts that can be very powerful alerts, guys. Very powerful alerts. If we look at just today's price action here on a 5-minute chart, you can kind of see the real edge. Let me put a 1-minute chart up to see what that looks like. Let me wait for it to load here really quick. But yeah, market's kind of chopping back and forth. And so you can see we got a reversal alert right at the very top of a lot of these candles here. Here's yesterday's price action, which looks even better here, where it literally shows you the exact bottom, the exact top. It documents support or resistance. Look, reversal up, bounce, dotted support line. We got the top of the range, the bottom in the range. Again, incredibly useful. Check it out. It's 35 bucks a month. Super useful in my opinion, but they are a sponsor of mine, so I'm biased in their favor. Check them out. Here is the link for Chart Prime. You know, like I said, 35 bucks is pretty cheap. Again, I'm going to go ahead and switch to our crypto show. And so I will see you guys over at the crypto channel, guys. Good luck. And you shouldn't have to go anywhere if it doesn't revert you, guys. It doesn't bring you to the crypto channel. This is what you do. You go to youtube.com/beginnercrypto. youtube.com/beginnercrypto. And, you know, it should revert you and bring you right back here. Let me make sure we're logged back in. Yeah, hold on, team. Sorry, I'm running a little bit slow today. But yeah, it should bring you right to the channel. If it doesn't, again, youtube.com/beginnercrypto. It should bring you there. If not, as soon as we end the stream, team, as soon as we end the stream, it should redirect you immediately to the crypto channel. Literally as soon as we close this stream down. And so you shouldn't have to go anywhere. We're going to enable redirect now. And with that said, as soon as we enable this, it should immediately bring you to the crypto channel. And so again, we're starting that stream now. Good luck. If it doesn't, go to youtube.com/beginnercrypto. I appreciate the love and support, guys, and I'll see you guys over there. Good luck. Again, check out Chart Prime, check out Top Step. Link is in the description. And yeah, good luck. There we go.